the backdrop of cheap data, availability of cheaper handphones, and people have been consuming, right? That essentially means, and a lot of that consumption is translating into aspiration for eating new things, trying new things, consuming new things, right? What that essentially means is that there's going to be a huge pressure on the entire supply chain that is there for food, agriculture, within that set, right? And what that means is that the entire value chain will have to essentially behave in a very, very different way, right? Something that is not necessarily innovation is something that has been slow when you talk of agriculture, right? I mean, there is a lot of innovation which has been happening, but like you mentioned, right, there's a lot of information that existed in silos. It becomes important that new integrated models come up, come very well. There is exchange of data that happens, right? Uh, with that, right, that consumption appetite, I mean, the world has been talking about us. We're a large billion people market, right, which is at the peak of its consumption. There are many, many challenges. It just becomes very important for agri ecosystem to come together. And thus, like I said, right, it becomes a very pertinent conversation around these times, right? What I'm particularly excited about, some of the emerging areas that I'm particularly excited about are, for example, warehousing, right? I mean, essentially, we as a country lose 40% of our produce because of lack of storage or inefficient storage, right? I'm very excited about technology-aided approaches to food production, right? Processing is going to be massive, right? Processing, and I was in a very interesting conversation with one of the speakers on our first panel today, right? And he said that if you need to solve this problem of wastage, if you need to solve this problem of longevity, right? Processing is something which is going to become very, very important. Process is something that we'll have to build that ecosystem. We'll have to build that framework where the farmer is able to produce process much faster, or many such stakeholders have to be brought in, right? So I'm very excited about the possibility of D2C. Uh, Mechanization and digitization of farms, right? I think is a very, very critical area. I think there's a lot of work which is happening. Right, there are many, many solutions that are coming in. There are many, many technology players who are coming in. Innovation is something which is happening, which is essentially ensuring that the farms become smarter in the process. Computing and sensing and integrated into farm data, right? Again, is data. Hemant also highlighted this entire thing, right? Data is going to be very, very important. We are essentially moving into very, very uncharted territories, right? We're not necessarily sure in terms of what our product life cycles are going to be, right? The consumer behavior, like I said, is going to be very different. What essentially that means is we'll have to have very sharp set of data available that the businesses can use to predict better, to process better, and to really optimize their resources. Irrigation automation, right? I think again a very critical set that I'm particularly excited about. Artificial intelligence, like I highlighted, is something which is very important. Uh, Input advisory is something which is very, very important. I mean, this is something which has been happening. This is something which is happened in a very static form, I think. But now going forward, I think we'll have to have newer models, right? We'll have to plug it in with, for example, satellite imagery, right? We'll have to do a very real-time advisory framework, right? I think these are models that have to come up much faster than we anticipate. I think whatever is happening essentially is happening at a very, very tangential level, right? For the size that we are, for the mass that we are, I think a lot of this adoption has to be enabled, and that is only possible when the PPE model that we highlighted, I think, comes together, right? Which is that of policy, product, and entrepreneurship, right? I think that those three things essentially have to come together. Uh, Microfinance and formal credit, right? This is something which is very, very close to my heart. This is something that I've been working very closely on with many stakeholders, and I think this is something which is very important in the Indian context, right? Because credit is something which is unfortunately either been available in private quarters, which has been absolutely bizarre, right? And you know very, very create has created very difficult circumstances for farmers. But I think they need to come in and be a part of the formal ecosystem, right? When it comes to credit, a lot of work needs to be done there, because that is something which can really bring in the velocity which is required in terms of being able to re-engineer and reprioritize their ability to produce. D2C is something that I highlighted. Food processing is something which is very, very critical again. Uh, Areas like crop insurance, forecasting, and customization, right? You may touched upon that. That's again something which is very important. Given where we are as a country, we're at an inflection point, right? I think we have, today we have the demographic dividend. Today we have the entrepreneurs, who are solving for many, many of these issues. It just becomes very important that we bring all of this together much faster. I think, bureaucracy needs to essentially uh, be engaged in this entire process so that, adoption can happen faster. Government, like I said, has a very critical role to play in these entire things. It becomes important that avenues like these become more regular, champions like Himenes and many others who are out there who are really sort of evangelizing the cause need to be brought to the forefront so that we can have a very thriving ecosystem, right? Adoption is very important. Newer integrated models are very important. And this is what we aspire and to achieve by the end of this conference and many more to come, right? Is newer partnerships, newer models that will serve for India better. With that, thank you so much, each one of you, for joining us for the session today. I'm looking for some exciting discussions. These are not going to be tangential discussions. These are going to be fairly focused discussions, but we're going to discuss many facets. Within the traditional ecosystem that has existed and the newer startups who are really disrupting the space, right? Uh, and the challenges they come across, right? And possibly make this as a piece of reference for many people who are going to watch it at the policy level. Thank you so much to each one of you. We welcome you once again to be, joining us today. And we, like I said, aspire this to be a very strong, relevant forum for any future conferences and discussions that happen. Thank you very much.
Thank you very much, Ashur. That's a wonderful welcome to today. And with that, we'll move on to our guest of honor for the day, Shri Om Prakash Shaklecha, Cabinet Minister, Department of Micro, Small and Medium Enterprises, Department of Information Technology in the Government of Madhya Pradesh. Also, Shri Om Prakash Shaklecha is a 1978 BCom graduate from Delhi University who has been predominantly contributing to the agriculture sector in the region.
नमस्कार इंडिया एग्री इनोवेशन फ्यूचर 2021 बाय एशिया टेक जनरल के द्वारा आयोजित इस कृषि को भविष्य में कृषि व्यवसाय को कैसे आगे बढ़ाना, इसके लिए आयोजित इस अति महत्वपूर्ण कॉन्फ्रेंस में कल्चरी ग्रुप एलएनसीटी द्वारा इंक्यूबेशन सेंटर द्वारा आयोजित इस चर्चा में मैं आप सबका बहुत बहुत अभिनंदन करता हूं। वास्तव में आज के ज़माने में और आने वाले समय में कृषि में बहुत बड़े परिवर्तन आ रहे हैं, चाहे कृषि के प्रोसेस के तरीके, टेक्नोलॉजी कैसे उसकी ये करे, उसकी ज़मीन को कैसे पर निकालने, चाहे हमें टिश्यू कल्चर में जाना पड़े, चाहे हमें फार्मिंग में जाना पड़े, चाहे के साथ ही साथ आने वाले समय में जिस तरीके से हमारे हॉर्टिकल्चर के आउटपुट का ट्रांसपोर्ट एंड डिलीवरी मैनेजमेंट को सुधारने की ज़रूरत हो, उन सब विषयों को लेके आयोजित इस बहुत बहुत शुभ कार्यक्रम सबके सुंदर भविष्य, आमदनी बढ़ाने में जैसा प्रधानमंत्री एवं मुख्यमंत्री जी की इच्छा है, इसमें बहुत ही सहयोगी सिद्ध होगा। नई पीढ़ी नए टेक्नोलॉजी पर काम करना चाहती है, वो जैसे ही आता है आज की तारीख में इस दुनिया के बराबर भारत का किसान तेजी से आगे बढ़ रहा है और उसकी क्वालिटी, क्वांटिटी और उसकी कॉस्ट ऑफ प्रोडक्शन तीनों सिस्टम कंट्रोल में आए, उसमें आप सब मुझे इसमें के माध्यम से सब लोगों से जुड़ने का जो अवसर दिया, इसके लिए मैनेजमेंट टीम का भी बहुत बहुत धन्यवाद, बहुत बहुत आभार।
Thank you so much for taking time, sir. Unfortunately, Sri Om Prakash Shaklecha ji couldn't be here with us, but he has sent us this video, which is exclusive for Asiatic Journal at India Agri Innovation Futures. Thank you very much, sir. Once again, that's a wonderful insight. Work W Hub co-founder and CFO Angel Hub to deliver this special address. She will be speaking on innovation in agriculture for global good.
Thank you very much, and hello and good morning. Thank you for giving me the opportunity to be part of the India Agri Innovation Futures Conference and to join the panel of highly distinguished speakers, an amazing group of experts, thought leaders, and change makers on the topic that is very dear to my heart and of great importance to all of us. A special thank you to Ashul Agrawal and the Asia Tech Journal family for our long-lasting and strong collaboration. I very much resonate with the declared objective of this conference, having a deep dive into the tremendous opportunities in the agricultural sector and the impact that innovation in the agri-tech space can create in India, Asia, and globally. Showcasing impact, but moreover creating impact, is something that is in the DNA of the two platforms my co-founder Karen Conte and I have built, based on a common belief that innovation and economic growth are created by startups and scale-ups. We transformed our own passion for the tech and entrepreneur scene into our mission, helping startups grow and scale by connecting them to the necessary resources. And with this, arguably helping all stakeholders to take advantage of the innovative power of the tech community. So WHub is the largest startup platform and a power connector and entire ecosystem accelerator for Hong Kong, the Greater Bay Area, and Asia at large. So what we do is we help startups to recruit, gain visibility, know-how, co-create corporate and startup co-innovation programs like hackathons and open innovation challenges and proof of concept implementations, and help startups to expand cross-border in Asia and beyond through our partner network of over 500 trusted organizations in the tech and entrepreneur world. Angel Hub is Hong Kong's first and only tech company investment platform, licensed by the SFC, our local regulator, for professional investors and growth companies scaling in Asia. And we do co-invest with our own fund on the platform, and we hold in our portfolio companies fintech unicorn WeLab and blockchain and gaming and NFT unicorn Animoca brands, but also a sustainable food tech company called Avant Meats, amongst others in Pomelo, edutech startup Tiny Tabs, Industry 4.0, and robotics company Botsing, etc. But the whole point was you will see that from this very diverse and diversified investment portfolio, you can see that we have a very strong focus on impact that we measure through the UN SDGs and the ESG frameworks. And with this, we're also organizers of one of the largest tech conferences streamed here out of Hong Kong called SIS, and hopefully I will see a lot of you in the 4.0 and ESG focus one in December. But with that, I just wanted to show with you in that whole background, you can fully appreciate me saying that I'm very passionate about the topic of innovation in agriculture for global good. And do allow me to particularly look from it through it only from a tech lens. So looking into agri-tech, it used to be defined as the use of technology in agriculture and aquaculture with the aim of improving yield, efficiency, and profitability. But not only since the pandemic, but really with the rise of the importance of solving the world's most pressing problems, agri-tech becomes more broadly defined now by also including things that are measured through the UN SDG goals or the ESG frameworks, like caring for the sustainability of the resources to guarantee yield and profitability, and not only for now, but for generations to come. So looking at the SDG framework, we can actually find agri-tech solutions tackling several of the UN SDG goals. The most obvious one, and the main one, is obviously goal number 2, zero hunger, right? To end hunger, achieve food security, improve nutrition, and promote sustainable agriculture. So it does include, even in the definition of goal 2, the agricultural productivity, sustainable food productions and food production systems, and resilient agricultural practices, and a genetic diversity of seeds, cultivated plants, and farmed and domesticated animals, and investments in that whole research and technology and more upstream part. The reason why this was spelled out as goal number 2 is that globally, 1 in 9 people are still undernourished. The vast majority of whom live in developing countries and in this part of the world here in Asia, right? And undernutrition causes severe hardship, particularly also on the younger population. Over 52 million children worldwide. It contributes to nearly half, to 45%, so nearly half of deaths in children under 5, which means 3.1 million children per year. You can even then think about, the relationship to the SDG goals in goal number 12, responsible consumption and production. Goal number 14, life below water. Goal number 15, life on land, right? Goal 30, my previous speakers talked about climate and climate action. And we can even go as far as saying, it's really captured and touches also on goal 11, sustainable cities and communities. So make cities a human settlement, inclusive, safe, resilient, sustainable, because that actually also includes protecting the world's cultural and natural heritage. So with the world population now set to grow to over 9 billion people by 2050, and obviously a big proportion of that in India, the demand for food is growing now proportionately. The UN estimates that we will have at the very least double. We have to double our agricultural output over the next years up to 2050 to really keep up with this worldwide population growth. So the question of how to meet the world's food needs in a sustainable way is becoming more pressing. And the agricultural industry really struggles to address a number of these challenges. And just again, to build on a little bit already what Ashu and Helen Rao, our previous key speakers mentioned. So yes, the increased demand for food, meat, and dairy with the rising middle class in emerging economies, food wastage, right? And still inefficient food circulations and allocations. So argue that the West is wasting more food than ever before, while those who are farming it, the farmers growing that food, make up for the greatest share of the world's malnutrition and poor. Climate change, deforestation, and as we mentioned through the pandemic, also really conscious on consumer health issues and chronic diseases. So looking into some of the stats, according to AgTech, and agri-food tech alone is a 10+ trillion industry. So in 2020, it reached investments of over 30 billion in that year, which was a steep increase. It was 34.5% increase versus previous years. So it can be said that agri-tech is starting to really go mainstream. And so hence, again, congratulations to the Asia Journal team on making a conference, just dedicated to this very, very important topic. And there are plenty of opportunities for expansion in the sectors in the years to come. And once again, COVID pandemic has certainly highlighted the importance of innovation in the sector. From an investment perspective, agri-food tech is no longer a niche. It's not experimental or not seen as risky anymore. In the contrary, now median deal size growth signals maturity of the first wave of innovation. And just recently, the fact that Impossible Foods was able to quickly raise 500 million at the very start of the pandemic, with all that uncertainty involved in financial markets, where typically it would be not prone for investment, was a high indicator of the strength of investors' conviction in this category. So when we look into companies and solutions, we look into 3 main categories. So one is upstream, everything that relates to biotech, bioenergy, biomaterials, farm management, and with that, robotics, equipment, novel farming, and agribusiness marketplaces. In the midstream area, everything around food innovation, such as alternative foods, right? Protein like lab-grown meat, plant-based proteins, plant-based meat, insects, algae, etc. And then even all the way downstream, right? In-store restaurants and retail innovation, online restaurants, e-grocery, farm-to-table, restaurant marketplace, home cooking, all of that. So just to take a little bit of a focus and one example in the alternative protein industry, the industry aims to provide nutritious protein sources that can be produced more efficiently and sustainably than the traditional farming practices. And the market capitalization of this is expected to reach over 27 billion by 2027. And it does include, as I mentioned before, lab-grown meat, plant-based proteins, insects, algae, and that lab-grown meat companies. These are predicted to be the largest player in this alternative food protein, and just in Asia, 10% is already the current market share of this alternative protein industry, and that's prone to grow significantly. Lab-grown meat is estimated to occupy 35% of Asia's protein consumption by 2040. While plant-based proteins and then are accepted and expected to make up other 25% of the total consumption. So more in general, we can see really innovations gaining ground in all these different elements, efficient supply chain, alternative ways of growing, processing, transporting, and selling food, the innovation between farmers and retailers, food delivery, again, in particular under the current pandemic environment, you really gain new ground for obvious reasons, e-groceries, etc. If once again I look through my investor head and look where the investors also put their money, in 2020, upstream investments had a huge focus with a 68% year-on-year growth, with over 50 billion of investments surpassing downstream investments, but closed by with 40 billion for the first time actually ever. So really these investments in food startups, they doubled to over 2 billion, mainly driven by these alternative protein startups, which I've already mentioned. Midstream tech companies also raised over 5 billion, and that is a 30% year-on-year growth. Biotech lost a bit of market share, but still, raised nearly 2 billion, which is still a 60% year-on-year increase. And that one is mostly dominated by gene editing, what we can see. Just from a geographical filter, obviously top of the list, we still have the US ranking highest, where startups raised over 15 billion in 2020, which is again steep increase, over 50% year-on-year growth and 30% year-on-year rise in just the number of deals, really regaining global market share. China remains second, right, in the second spot because of a large downstream investment in deals, and it's projected to have been close to 6 billion. So again, over 20% growth year on year. In Europe, it's the UK, right, to continuously lead European regions. Africa closed more deals than ever, 30% growth, and raised 50%, a little bit less in dollar amounts, but it's also really this focus on even earlier stage and younger companies. And then Asia closed 7% more deals year on year. We had our previous keynote speaker, Hemendra, showing about the tremendous activity happening now in India, which is really great to see. Now, opportunities will continue to lie ahead, right, and create new efficiencies in various points in the supply chain. Again, just to spell out a few: food waste, CO2 emissions, chemical residues, and water shortage, labor shortage, health and sugar consumption, opaque supply chain, distribution inefficiencies, food safety, traceability, farm efficiency, unsustainable meat production, loss of biodiversity, etc., etc. And once again, addressing a global population. And then just with that, allow me in ending to take that global lens, to have a word on globalization. If we think about globalization in a business context, it's truly really a market-driven process that stems from the belief that markets and the opportunities they offer are way more important than states or unique states developments in the future of our business and the planet. So identifying these opportunities, assessing these opportunities, being able to capture these opportunities by leveraging the power of the global community. The world truly needs to collaborate on these challenges and create inventions that will make our lives better. And I cannot stress more the importance of collaboration. And our previous speakers talked about partnerships as one of the 3 Ps that are important that need to come together. We recently had the pleasure to collaborate with Uplink, an initiative by the World Economic Forum, and with a will an initiative to foster collaboration, not only between established companies, governments, and academia, but also with grassroots innovators and agile startups. So to solve really these most important problems, we need to see this diversity in collaboration to maximize our chances of success in such a highly complex, ambiguous, volatile, and uncertain world. So really having academia and practitioners, corporates and startups, regulators and industries, fueled by the right investment and funding ecosystem between young and old and between geographies, that is truly our mission. And once again, congratulations to Asia Journal, because creating such conferences is a wonderful starting point to achieve exactly that. So with this, I am very much looking forward to the discussions, and I wish you all a fruitful and very impactful conference. Thank you very much.
Thank you very much, Karuna. That's a wonderful insight, and we'll love to have you once again with us. With that, ladies and gentlemen, I'd like to. With that, we'll move forward with our first panel of the day, and I would love to take the privilege of introducing the panel to you. Solving a Billion People Market, Policy for a Progressive Agriculture Nation. The panelists for the session are Manoj Nambiar, Managing Director, Arohan Avishkar Group; Siraj Chaudhary, Managing Director and CEO, NCML; Amit Rastogi, Executive Vice President, Technology, Coromandel International; Arindam Datta, Executive Director, Rabobank; Burjis Godrej, Head Integration Digital and Special Projects, Godrej Agrovet; Tarun Arora, Director, IG International; Rajesh Sinha, CEO, BSE E-Agriculture Markets, BEAM. The session will be co-moderated by Ashu Agrawal, India Lead Asia Tech Journal, and Hemendra Mathur, Venture Partner, Bharat Innovation Fund, co-founder, Think AG. Mr. Ashu, over to you.
Thank you, Aditya. It's a pleasure to have each one of our speakers with us. I request, is everybody there? Do we have everybody on the screen? Thank you, Aditya. It's a pleasure to have each one of our. Okay, I'd request everybody, if you're watching on 2 screens, I'd request you to please put your mic on mute because I can hear the audio in the background. Okay, awesome. And this is an exciting panel, right? I mean, given the experience that I have on this panel, right? It just becomes, a conversation can't really be as exciting as this one, right? I think each one of my panelists, right, have spent a substantial amount of time. I mean, we had Hemendra, who opened India Agri Innovation Futures 2021 for us, right? And he's been absolutely spectacular in his understanding, right, of the Indian agricultural, markets. He's a co-moderator, right? So, like I said, right, with all the experience that I have, across the spectrum in the Indian agricultural ecosystem, right, and of course the global participation, right, it just becomes this becomes a very, very exciting session. I'd request my panelists to quickly introduce themselves. I'll come to Mr. Nambiar. Mr. Nambiar, if you could quickly, a quick round of introduction would be very helpful. Okay, I'm going to move on to the next one. I'll come back to Mr. Nambiar in just a bit. Mr. Chaudhary, Mr. Siraj Chaudhary, he's there with us. I see him. He's joining us from a distant location. He's on a vacation. Thank you so much for taking the time on being with us. If you quick round of introduction.
Good morning, Ashu. Siraj Chaudhary. I now lead an organization called the National Commodities Management Services Limited, (NCML). As a lot of you would be familiar with, we cover the post-harvest agri supply chain space. I've been part of Cargill for a very long time. Cargill is a global agri and food company, and I'm happy to be here with all of you today. As Ashu explained, I'm in the middle of nowhere, so connectivity is a bit of a challenge. So.
No, I think we'll keep that in consideration. I'm going to come to Mr.
Yeah.
Rastogi. Mr. Rastogi, you've been in the industry for a very long time. Quick round of introduction would be very helpful.
Yeah. Good morning. Good morning, everybody. I'm Amit Rastogi. I work for Coromandel International. It is a large agri input player based in Hyderabad, and we supply a range of agri inputs from fertilizers to crop protection chemicals. I look after the technology function. Specifically, I look after introduction of new technologies for both products and processes, related to both products and processes regarding plant nutrition in Coromandel. Thank you.
Interesting. Mr. Datta?
Good morning, everyone. Thank you, Ashu. Like Siraj, I'm in a remote location, holidaying somewhere in the back of beyond. So sorry for the patchy network, but my name is Arindam. I work for Rabobank. Rabobank is the world's largest bank in food and agribusiness. It's also the world's most sustainable bank, and we have deep interest in technology for obvious reasons because all our clients are in food and agribusiness. So we have multiple products in the Indian markets to help technology players by enabling access to finance, by connecting them to large food and agri companies, and also mentoring these tech companies. Thank you, Ashu.
Super. Mr. Burgess Godrej.
Hi, I'm Burgess. So nice to be over here. I'm with Godrej Agrovet. So that's a very diversified Indian agribusiness. And we're in many different segments. We're in crop protection, we're in animal feed, we're in dairy processing, vegetable oil as well. My role is integration of what we're doing in the dairy division, because we're India's largest seller of cattle feed, and we have dairy processing as well. And we want to get more into digital dairy products and actually selling the new breed of cattle that we've developed.
Super, super. Tarun?
Hi, Ashu. Hi, everyone. This is Tarun. I'm one of the directors of IG Group of Companies. I look after M&A and strategy at IG, and IG is one of the largest distributors of fresh produce in the country. We're also one of the growers of fresh blueberries in India. And this is all from my side. I look forward to the event, and I'm very excited to share my insights over it. So thanks.
Super, thanks, Tarun. So are we. Mr. Sinha?
Thank you, Ashu and Asia Tech Journal for having me in this August panel. I am Rajesh Sinha. I look after BSC e-agriculture markets. This is the arm of BSC. It's a subsidiary of BSC, which is set up to create a nationwide B2B e-marketplace with a specialized focus on food and agri. Prior to this, I was with NCDX E-Markets Limited, where I remodeled their business into a profitable B2B electronic marketing services model.
Super. Thank you so much, sir. And my co-host for the session, Mr. Hemendra Mathur, I think he was extremely eloquent, right? And somebody like I have a huge respect for. Hemendra, I would let you start this session. Over to you.
Thanks, Ashu. No, I think it's a great panel, and I hope we can do the justice to the kind of expertise we have on this panel. But yeah, I think it's great to have everyone. I think we have a lot of diversity, I must say, on this panel, and happy to ask a few questions. Ashu, you want to go ahead? You can go ahead, or I can start.
I'll do that. So I think COVID has been an extremely, I think the way I look at it, gentlemen, is that COVID has been an extremely difficult period for each one of us, right? At a personal level, but also at a professional level, right? Because like I said something in my opening note, right? We are essentially in uncharted territories. These are difficult times, but these are also times where we are growing aspirationally as a country, right? Now, what that means is that there's going to be a huge expectation that we're going to have in terms of what we consume, right? What that essentially means is there's going to be a solid pressure on the producers and the produce, both of them, right? But before we dive into all of that, right, I'd love to understand a little more about the impact of COVID. How is it that each one of you dissects, right? I'll come to Mr. Chaudhary first. Mr. Chaudhary, I'd love to hear from you. How do you break this down, right? I mean, how do you break down the impact of COVID on the agricultural sector? Because this is something which has disrupted, the ecosystem completely, right? Agri is slowly and steadily sort of, kind of adopting to the new world technology. Challenges are fairly large, right? Because there is a large set of people who are dependent on this, right? I'd love to hear your views on the impact of COVID on the agriculture industry.
Thank you, Ashu. I hope I'm audible because I don't know, my screens keep moving up and down. But yes, so COVID in fact has taken the world by, it took the world by surprise and then has had a significant impact. Talking about Indian agriculture, quickly coming to the point, I think the Indian agriculture space has withstood this challenge fairly well. And we've seen it all around in the conversations that, the last 2 years have been great. The current year and the previous year have been great in terms of productivity, the produce of agriculture that the country's been able to get its movement to the market. It has also been coinciding with the time when the global commodity prices were high, and that happens in cycles, and we were in the space of the high price cycle, which actually helped, I would say, supported the farm sector. The government took certain measures which were timely. One was that we were fortunate as a country to be sitting on a large stock of grain, particularly paddy and wheat, which could be distributed to the population, to a very large population, much beyond what the Food Safety Act had envisaged. And that kind of kept the stomachs filled to a large extent. I'm not saying it reached everyone as much as it should have, but to a large extent, we kept that covered. The farmers got better prices for their crops. And as a result, I think, we came out of this situation much better than a lot of other nations. The government did a bit in terms of, paying off the farmers under the Prime Minister's payment scheme. And also, the important thing that emerged, the theme that emerged out of this COVID was the need for technology. And therefore, the surge in agtech is what I would say the positive takeaway from this COVID, the need for technology to improve supply chains, because the element of the whole, if you take agriculture as a sequence, we go from, soil, the choice of crop, to the growing of crop, then to the supply chain and marketing. And when I'm talking about growing of crop, it is also the supply chain for the inputs that go into the crop. And I think there was significant sort of contribution or effort, at least, to get technology into that space to overcome the challenges that distance and place and lockdowns had placed. So I think this has opened up the whole agriculture sector to a new space and new way of doing things. And if you're able to leverage this well to garner, or rather harness this sort of situation well, with the new technologies coming in, a lot of new capital coming in. And one of the things that I often talk about is that, we conducted our agriculture and food in a certain way all these years. And that was because it was driven by people who were, running large businesses, and they did what they needed to do. But what we now have for agriculture is a lot of risk capital coming in. And that is encouraging people to take a much longer view of what can be done with Indian agriculture. There's a huge potential. And when I say potential, I mean that there are a lot of challenges which needs to be addressed, and technology is a great tool in addressing that challenge. And I think that COVID has accelerated that change. It could have happened over the years, but I think COVID has accelerated that change.
Interesting. Thank you so much, Mr. Chaudhary. Mr. Datta, I'm going to come to you, right? I think you've been in the sector. You play a very critical role, right? In terms of enabling many people. I'd request each one of you to sort of keep your mics on mute, right? As I come to you, you can switch on your mics. Mr. Datta, you've been engaging with many stakeholders, right? I mean, you've been on the financing side of it. In a way, it becomes important for you to absorb the risk, assess the risk, right? It becomes very important, right? An environment like the one we are in, right? COVID has been unreal. I mean, it completely disrupted the supply chain. And like I said, the consumer side pressures are now kind of looking different, which essentially means the entire supply chain is going to be under tremendous amount of stress, right? What do you make out of a COVID-like situation, right? Given we are a large ship, right? How well do you think we're prepared for the change which is required to tackle the current problem?
And actually, Rabobank has also come up with a COVID response fund. I think I would request Arindam to talk about that as well.
Absolutely. That'll be lovely.
Thanks, Hemendra. And so, Ashu, what I will do is, because the question you are asking is very, very broad, and to a large extent, Siraj has addressed a question. So I'll stick to the access to finance issue.
Sure.
Now, if you look at the COVID-like situations, the risk appetite of the financial institution goes down. There's a lot of liquidity which is pumped into the system.
Right.
But financial institutions, they kind of up the underwriting game, and they only lend to very limited, very, very close customers of theirs. So
Right.
that happened during COVID. There was a choke when it came to small farmers, small businesses, not only in the agri sector, but across the sectors. And the portfolio at risk did go up significantly. So that's for real. It happened. Now touching on technology, as Hemendra had mentioned, that COVID provided huge tailwinds to the agri sector,
Right.
specifically for ag fintech. Now, now what does technology do? I mean, there's so much of information asymmetry out there, which leads to such high transaction cost and risk cost. Now, technology has the ability to be able to make sense of the disparate information which is there in different pockets, which if we try to do humanly, it takes too much of effort and too much of cost.
Right.
So now we have innovative fintech companies and agtech companies which have critical information of the farmers, whether it's static information like the farmland and all, but also dynamic information season on season, which is critical inputs for a bank to take underwriting decisions. Then we have players like Satshio. I saw the founder of Satshio on this on the panel, or probably is in the next panel. But they have come up with very innovative solution of working with financial institutions in India to de-risk their operations. So my sense is, along with addressing the other issues, technology is going to play a very critical role when it comes to access to finance, for the simple reason that technology has the ability to make sense of information in a credible manner, in a dynamic manner, and in a manner where the information becomes more trustworthy. And that will lead to unlocking of a lot of capital from financial institutions in India. It's still work in progress, but the progress we have seen from the fintech companies and the agtech companies of working with financial institutions is extremely encouraging. And just I'll take 30 seconds on what Hemendra mentioned, the India COVID Response Fund. So we, along with DFC, that's the guarantee arm of the US government, USAID, and a host of other partners, global European and US partners, and 3 financial institutions in India, we built up a classic blended finance program. It's a $55 million program. In Indian rupees, it's approximately 400 crores. We are calling it the COVID Response Fund for Agri Transition. Transition because we are asking the industry and the financial institutions and the farmers and the SMEs to move from inclusive agri chain, where India is already doing a lot, to more of green and environment financing, because it's the first facility we have set up, structured facility for food loss, and to enable renewable energy in the ag sector to access finance. With that, digitization of farmers, any digital company will also have access to finance, along with the physical aggregation models of smallholder farmers. That's the FPOs or the FPCs in India with a gender's lens. So it has inclusive and green end use. Over to you, Vash.
Very interesting. Thank you, Mr. Datta, for doing that. I mean, how I want to sort of, probe you further on that point, right? Because that's a very, very critical point that you've highlighted, right? I think, going forward, a lot of startups that are operating in that ecosystem, and I think not just startups, but a lot of, integrators will also need that kind of support ecosystem when it comes to funds, right? I'm going to come to Mr. Rastogi, right? Mr. Rastogi, and Burgess, I'll come to you on this one, right? Is that, supply chain got terribly disrupted, right? And something that I kind of alluded to, in my question with Mr. Tata, right? Is that now everything has to become so much more dynamic, right? Everything has to come together. It has to be so much more integrated, right? Because if it's not, it will start to fall apart, right? There are going to be huge inefficiencies in terms of non-consumption, right? Which could essentially mean that organizations might not necessarily survive, right? Because the prerequisite of anything to do in agriculture is massive, right? You have to create capacities. Inefficiency could mean a lot of stress, right, on your performance abilities. What do you make out of this, Mr. Sogi? I mean, given that you are essentially in that play where there's a huge amount of enablement which is happening from your end, I'd love to understand your perspective as well.
The perspective which I will offer is from an agri-input player, because we are in the agri-input business.
Sure.
So when it comes to a supply chain, I think you were probably referring to supply chain, the downstream supply chain, or which links the products to the farmers, from the farmers' farm gate to the markets.
I'm saying pretty much the entire thing, right, from the consumer till the producer.
Right. So what we see is that there is a very significant impact on the COVID, especially had a significant impact on the agriculture sector in the agri-input space, from 2 points of view. One is that we had a lot of labor moving back to the farms.
Right.
So it had two effects. One was that we had fewer people to work in the factories, and we had more people on the farms.
Right.
So we therefore are looking at technology as also to provide solutions in our production facilities too, so that we have less labor in our factories. And when it comes to the farms, because we have more and more people working on the farms, and there has also been an infusion of funds by the government into the agriculture sector, into the rural areas, there is a huge upswing of demand for agri-input space. So that is a very positive sign that we see, that the demand for nutrients, for crop protection chemicals, there is a huge demand for these inputs. And the farmers are willing to invest in not only in inputs, in new technologies, because we have a lot of people who have come back to the farms who see farming as a future now,
right,
which was earlier not the case. Coming to the other supply chain, we are also seeing that because of COVID, there is also a greater concern for health. And the consumers are now demanding food, which is considered to be more healthy, more nutritious, which helps in building immunity. And the supply chain is also looking at products which can help, which can convince the consumers that we are offering you products which are more nutritious. So we see, in fact, we are working with startups which can help to analyze the nutritive value of crops. See, earlier the focus was only on yield maximization, but now the focus is also on the nutritive value. So we see that these two seem to be going hand in hand. People are asking, when they're looking at the supply chain, it is not only supplying food, but it is also supplying the right kind of food. Absolutely. And we see that there is going to be a huge potential for startups which can assure the quality of food. And the right kind of food should reach the consumers. So the consumers are asking for food with better protein, with better higher quantity of zinc, and all that will actually have a cascading effect right down to the agri-input sector. So these are the two areas we see where there is a huge impact of technology, both in production and also in the supply of food to the consumers.
That's a very.
I have one additional question for Amit.
Yes,
Amit, in agri-input, we are seeing a lot of alternate channels coming up, who are building supply chain, which is more like direct to farmer. You have players like AgroStar, Gramophone, Big Heart. There are multiple such regional players. And they are solving a large problem, building access to the farmers. They're also providing data advisory. Some are enabling credit, and some are also doing last mile delivery. You being one of the largest agri-input players, how do you see these alternate channel emerging? Of course, they're very small as a percentage of the entire universe, but do you see that these channels will become more and more important to players like you?
Yes, we see that these channels are going to bring in a more scientific approach to farming. They're going to raise the demand for produce which is of better quality. See, because the use of inputs is directly linked with the quality and the quantity of produce that is demanded by these channels. So the entire, as you had mentioned, the entire efficiency of the channel will improve. And we see that these new alternative channels creating a big pull for the use of scientific, use of agri inputs in a scientific manner. So they will be the trigger which will motivate the farmers, the FPOs, to move towards more scientific methods of farming, to use agri inputs in a more sustainable and intensive manner.
No, I think that's a very interesting point that you've highlighted, right, Mr. Slogan, and I kind of concur with that. And I would love to, I'll just come to Tarun, you on that point, right? But before that, I will come to Burgess. Burgess, you're essentially in the same ecosystem, right? I mean, you spread out across the entire value chain, right? I'd love to understand in terms of how do you view, the new supply chain requirements, right? Given what you mentioned, right? I mean, now it has to be an integrated system. I think the models are going to be different, right? I think Mr. Rastogi also highlighted to it. Himanshu also asked the same question, right? We'll have to have that sharing, right? If we do not have that sharing of data, right? If we don't have those common structures in place, right? It'll possibly lead into inefficiencies. How do you view that, right? And that could essentially mean that, a consumer side aspiration can kind of, percolate into, you have to have an alignment with that as a producer, right? How do you view that new emerging relationship, right? And it's going to be more transparent relationship. What's your take on this?
Yeah, so a few thoughts on supply chain changes. Sure. I definitely think that we're moving more from a predominantly physical sort of system to a phygital system, where consumers are more willing to try out digital solutions, including farmers as well. They want to see the range of options available. With so much of migration that happened back to the rural areas with COVID, there was an interest in improving agricultural production with people who had been in the cities, who had been using those kinds of digital solutions more often. So I definitely feel that having that kind of omni-channel presence will be very important for agriculture companies, and collaboration with startups will be essential for that. And also COVID change on the supply chain front is that there's a lot more export potential from India, because people want diversified, resilient supply chains. There's very much a China plus one kind of strategy. So that also opens up a lot of opportunities for Indian companies. And while there are short-term disruptions like container shortages, etc., India's exports have been increasing in the last few months, and I expect this trend to continue. It's very positive for the country.
Fantastic. Thank you so much, Burgess. Tarun, I'm going to come to you, right? I think one model which is kind of coming very clear, I think Mr. Rastogi sort of highlighted to that model, right, is essentially, the awareness the consumer is now kind of operating in, right? They're very clear in terms of what they want. They're reading a lot of stuff. There's a very definitive influence, right? There's a lot of content that they're consuming, right? I think health has become a definitive priority, right? Which essentially means that this thing has to now be delivered across the value chain, right? How do you break it down? You are essentially into imports. You're also producing, right? And I think you are in many ways dealing directly with the consumer, right? I mean, how do you view this entire situation, right? The complexity of the situation, because the aspirations, like I said, and how people want to consume is going to shift much faster, right? We're definitely geared to being a high or a very driven consumption economy, right? The influence, like I said, is going to be very different, right? How do you break it down and the complexity around it?
No, I love breaking down complex problems. So I'll take a shot on this one. In terms of value chain, I feel the overall country is becoming more responsible. Now, I'll go back to the entire supply chain and I talk about impact, which is what. Then I go to where are we standing today, and then we go to where are we heading. So that's how I break it down. What are the impact? Now, when you look at COVID, there were two impacts. I mean, anywhere, it's just demand and supply. We've seen crisis all over, since the civilization has probably started. And here we've seen two shocks, demand and supply. Generally, we see supply, we don't see demand. But in this crisis, we saw both shocks. Now, that's number one. But then again, what happened and then where we are today? Agri, I'll quickly run through this thing. So Agri immediately happened V-shaped recovery. And we quickly recovered. Okay, so that's sort of summing up on the short. But then all the bad things we know, because it was humanitarian and there were personal losses around. So I'll not go into that. I'll talk about only the good things.
Sure.
And in the good things, I'll break it down to three things. So where we are today, three things. push on digitization. Huge in this sector. Never seen.
Right.
Now, how do I back it up with an example? This forum. Now, this forum in itself is an example of where we are heading, and where we are today. Now,
Right.
this is big. 2, push on sustainable infrastructure. Now, one thing every stakeholder has understood very clearly is that infrastructure has to be sustainable.
Sure.
We just cannot think about today. We just cannot think about commercialization and profits today. We have to think next 100 years. We have to think about, the next generations to come. And that's how we need to put it. So a lot of private companies today are putting their skin and making sure that they're building sustainable infrastructure. Now, whether the sustainable finance is coming or not, I don't know. Whether it will come or not, I don't know. But people have become more responsible. So they are investing into responsible value. Number 3, very, very important. When you talk about consumption is driven by consumers. Consumers have become more aware. How? COVID. How did they become aware, and how do I, back it up with facts? Now, for facts, protein. Now, protein in India, pre-COVID, going back, 47 grams. In just 2 years, we've gone to 52 grams
Right.
per day consumption per capita. 47 grams in Indians, 90% of it comes from plant-based protein, right? So plant-based consumptions. So it is not animal-based, it is plant-based. When I compare it to US, 90 grams, largely it has come from animal-based. So we are 90% dependent on plant-based, which means that this will thrive agriculture completely. So this is what it means. And this all summing it up together, where we are heading, I see huge potential. I see agri companies breaking records on revenues and becoming more responsible too. And that's where I feel this forum is basically an idea-provoking forum in the entrepreneurs which are coming. This forum, this platform. So today, I don't know, maybe 500 participants today listening to all of us. We need to provoke this idea among them, trigger this thought process that this is the industry that you should come and join and take this forward together to make our planet greener, better, more sustainable, and we can all do this all together. So this is my
Tarun, thank you so much.
I have 2 questions for Tarun, if I can go ahead.
Absolutely.
Tarun, if you look at the fresh produce supply chain, I think there are 2 variants which are emerging. One is more like direct to retail, likes of Ninja Cart and Waycool and Agroway, who are trying to build that supply chain. Essentially farm to retail. Retail could be Horeca or modern trade or mom and pop stores. And second, D2C, direct to consumer. Players like OTP and few others. It's still very small, but nonetheless, it is also picking up. And you being one of the, I would say, largest and a very traditional player in the whole fresh produce value chain, how do you see yourself participating in this new age model, which are typically driven by these tech entrepreneurs, if I can call so? Because you have so much of domain knowledge, and I think for them to succeed, it's so important they partner with you. So do you see them as a partner, a collaborator, or a competition? I think that'll be good to understand.
See, for me, they are, even my competitor is a stakeholder. So I look at them as a stakeholder, and I'll bucket them in a way. See, first of all, they are, collaborators with us. As far as when I look at them, they're doing great, and they're sort of integrating the whole thing, and they are sort of reducing the overall supply chain by eliminating the intermediaries and growing income both for farmers and giving value both to the consumers. So it's a great model. It's a very, very good model, and I vouch for it. However, when you look at us, we are differentiators. We have different set of and bundles of competitive edges that we have incorporated inside of IG. So when I look at my own self, we are vertically integrated, and that's where I said our focus is very different. Our vision is very different. We are looking at sustainable planet more. I mean, even as a private organization, my focus is not we want to earn money, but at the same time, we want to be creating a responsible value chain. Today, the projects that we are doing, every project is with roof-based panels. Every project is with the sort of sustainable farming model, smart farming. I mean, where we are emitting or we are reducing the carbon emission out of the planet. I mean, that's where we are delivering value for our consumers, and that's very long term. So that's where I would say that we differentiate from the existing model that people are into, but I vouch for their models too, and they are our partners and collaborators, and we also deliver to them. So yeah.
Interesting. Interesting. Gentlemen, I would love to touch upon the role of financing, right? I think role of financing is very, very important, right, in the given circumstance, right? I think we've spoken about supply chain, right? Now, if you look at the cross section of agri-tech and fintech is something which is very, very interesting, right? Mr. Datta, I'd love to come to you on this one, right? Now, there are two sides to this one thing, right? Uh, the first one is essentially around the credit rating, something that you touched upon, right? What we have essentially are very basic mechanics, underwrite the agri value chain, the supply chain, and the ecosystem, right, and the farmer at large, right, and that's the credit is not something which is kind of taken off the way it should have, right? Uh, what do you think? I mean, you alluded to it, this particular point, right? We're in extremely dynamic times. I think financing is something which is going to be so much more important. I think unless we increase that exposure, right, the velocity in the entire game is not going to happen the way we anticipate and we expect it to be, right? What's your sense of it? I mean, what are some of the things? I mean, you alluded to some of the points, right? But I think across these newer models, right, will bring in that sensitivity and understanding, right? For example, weather data, soil data, so many other things, right? These are still in very, very in early stages, right? This is essentially in infancy. How do you think? I mean, how do you think we can build on this much faster, given our requirements are right in front of us? I mean, we don't have necessarily that comfort zone and time, right? We need to have all of this going much faster, right? What are some of those things that you think are going to be important on this side of the game?
Thanks, Ashu. Very good question, because access to finance is a necessary condition.
Right.
Without that, we will not have agriculture development or sustainable agriculture development the way we wish to see it.
Sure.
Now, a couple of things. Finance is just one product in the entire, financing suite.
Right.
Earlier, one of the speakers had talked about insurance.
Right.
It's extremely critical to get in the risk mitigation financial products in place, and that's where in most of the emerging countries, which is dominated by smallholder farmers, we see this issue, that how do we get the right kind of viable insurance product? And that's again where technology is playing a major role. Some of the agtech players, people who are handling weather data, soil data, water data, and making a sense of all of that to see what crop can grow and what are the risks and what kind of insurance products can be rolled out. It's work in progress, but I do see a huge amount of effort being made on that front. So
Right.
that's critical. The third aspect is that we mostly in India, entire policy decisions which have been made over the last 30, 40 years has been on balance sheet financing, whether it's an SME or a smallholder farmer. But we need to look at post-harvest financing. Now, post-harvest financing in India is minuscule compared to the requirement. That's because of lack of infrastructure. There have been a lot of frauds. But again, technologies like blockchain, technologies that enables the surplus of a smallholder farmer to be put meaningfully in a warehouse, and all of that to be aggregated together from a bank's perspective, so that the bank can take a portfolio view. That's also emerging. We have some very fine new age collateral management agencies which have set shop, and they are riding on modern technology, digital technology. So that's extremely critical. Uh, Now, financial institutions. Now, for them, the cost of again reaching out is extremely, extremely high. The transaction, I keep harping on that, it's a transaction cost issue, but technology has the ability to be able to cut through that the transaction cost, and also importantly lower the portfolio at risk cost, so that it becomes a viable proposition. So we just access to finance, working on that, having the right kind of policies is not good enough till we get the risk mitigation financial tools and the post-harvest financing in place. But the good part is, again, some of it is due to COVID, is we have seen some very, very nice progress in the Indian market, and most of it has been backed by private capital, and it's been led by extremely competent entrepreneurs.
Very interesting. Mr. Rastogi, Brijesh, I'll just come to you. I mean, there's a very interesting question that I have, right? I mean, in supply chain financing, like Mr. Datta highlighted, right? I think there are alternative mechanics that we'll have to sort of build in, right? And not only traditional products, right? A lot of startups are now today doing it. I mean, we have buy now, pay later products, right? And given that there are massive supply chains that you're already in, right? There are larger distribution networks that you have. It just becomes important to understand how do you seize and size that as an opportunity. Mr. Rastogi, we can start with you, right? I mean, what do you make out of all of these things, right? So input financing, for example, right? What are some of the, say, newer ways that you're looking at it, right? Are there some collaborations that you've done where you essentially empower the farmer to, say, transact fast, move fast, and not necessarily depend on, say, savings, right, to be brought into purchase?
Yeah, see, I'll just go back to one of the points which was made by Mr. Hemant Mathur in the beginning, that out of 115 million farmers in India, only about 20 million adopt technology. And, if you really see, many of the startups do provide advisory services on the use of inputs to farmers. And many farmers prefer to continue with their existing practices. And one of the reasons we find is that the objectives of each farmer is different. Some farmers prefer to maximize their profits. Some want to minimize the risk. Some want to maximize the ROI. Now, what we see is that to be really effective, to provide a really effective solution to the farmer, we need to actually provide in-farm management services. So for an agri-input player, it's very important to understand the risk profile of each farmer.
Right.
What is the what is the level of risk the farmer is willing to accept to achieve a certain level of profit?
Mm-hmm.
And now the agri-input player has to move from being just a supplier of inputs to a management, to a provider of management services.
Right.
And the reward to the agri-input player will come through a sharing of the risks.
Right.
Basically, the risk mitigation does not necessarily mean only a financial product.
Mm-hmm.
Risk mitigation can also come by leveraging digital technology to manage the farm, to provide in-farm management services so as to reduce the risk which the farmer is facing.
Right.
Now, the farmer, as you know, the farmer faces risk from the climate point of view, with a lot of unpredictability, uncertainty involved in farming. Now, can the agri-input player leverage technology, use predictive models to decide on what inputs to be used, when should they be applied, how should they be applied, and kind of guarantee a certain kind of yield to the farmer, whereby we are sharing the risks and also the rewards.
Interesting.
So this is the kind of model which I see, which is going to be a natural progression for agri-input players, where they move from just being suppliers of inputs to actually having an in-farm presence and providing a complete sort of a service which will mitigate the risks which the farmer is facing. And this has to be tailor-made, a customized solution, because the risk profile of each farmer is different.
Interesting. Mr. Rastogi, important points that you highlighted, right? Mr. Sinha, I'm going to come to you, right? I think the biggest risk is the price risk, right? That I think across the value chain that you kind of the producer faces, right? And not just the producer, but also the manufacturer or the processor in the larger scheme of things, right? You've been somebody who's been helping at BSE markets, right? At NCDX, right? I think it becomes important to sort of go out and one mechanism of hedging that risk becomes mitigating that risk becomes hedging, right? And that's something which is being used across the board, right? What's your sense of it, right? And how do you see this entire thing evolve, right? I mean, the smaller farmers are still not using some of these techniques, right? Do you think it needs to be broken down at a level where every stakeholder can come in and adopt this, right? Because these are important mechanics, right? And now we're talking about for example, predictive technologies, right? Data sets have always been available, right? With the markets, right? To make those predictions, to go out and hedge their produce. What do you make out of this, right? I mean, how important do you think going forward is this going to become?
See, I think almost every panelist has already highlighted this.
Sure.
So I won't really repeat that mitigation of risk is important. Now, coming from two perspectives we are talking, one is a forward exchange, because you talked about price hedging, which is a
Right.
tool used for derivative markets.
Right.
So a basic difference between a naked forward is that two of us enter into a contract for a future price and commodity, but it is not guaranteed by anyone. So that is
Right.
a naked forward. That's pretty common. Even in exports, it's happening nowadays. People are actually going and uh, delivering goods without an LC also.
Right.
And that's a bothersome thing for a country like India, which has now become a surplus producer in most of the commodities.
Mhm.
So to that extent, I think exchanges need to further innovate to bring in more and more farmer aggregators, I would say. And now with FPC Act, Farmer Producer Company Act, there is a window opened and exchanges are, and this time I'm talking for forward exchanges.
Right.
They are fully focused on trying to bring them on board. So, options where a farmer has a right to sell, but not the obligation, could be a game changer, provided the largest player in agri commodity, which is the government, they start playing into it, because that could lead to a tremendous change in the way government fiscal incentives or disincentives are, because they have to cater to most of the mass produce, and there is a huge fiscal burden out there. So if we can really have option writing, that could be one piece on the forward market side. Obviously, I won't really talk so much on the forward markets, but when it is guaranteed as a counterparty guarantee through an exchange mechanism, which is a regulated exchange mechanism, we need more and more participation.
Right.
So I think there is at this point in time, a vacant space for a player. And I would urge, I think we have a lot of investors right here, to have a broker kind of a person, which is a trading clearing member, who focuses only on agri produce produced by small farmer aggregators. There is no one in the country doing it. Most of the people who are doing, they are financial brokers who have created a commodity segment. That's one piece. I won't really talk more about it, but let me come on to what I'm really passionate about. That's about markets. So price discovery, I would say that banks and exchanges have been disrupted almost fully.
Right.
You are actually seeing consolidations in exchange space and not so much growth. So at somewhere, the entrepreneurs and tech entrepreneurs, I would say, have really gone into it and have delivered much more value at each point what exchanges do. So first is the membership. So that membership models have actually been disrupted. You look at risk management, that has actually been done into a fine art where there are few entities which are just focusing on price risk. So you have seen factoring evolve into a bill discounting, evolve into so-called factoring, and there are a host of entities already getting into it. Now, third piece is on the price discovery. So Beam is in that space where we are trying to create multiple price discovery model. So if you look at forward exchanges, we only have multiple buyer, multiple seller, real-time, price time, priority auctions. What it essentially means is multiple set of people, maybe in thousands and millions, could actually come together and put price, and it will not show a lag. BSC is world's fastest exchange with the speed of 6 milliseconds. And that kind of sees, lakhs of people can bid. But that's not what is required at farm level. What is required is having a multitude of price discovery options. Similarly, so you need to have single side buyer and a multiple side seller. That's what I think was a core on which we built efficiency on the price discovery. That's one piece. Now, other piece is on the settlement. Now, other than just e-auctions, you could have a third entity is required to monitor contracts. In our country, while we have successfully done contract farming since the days of Frito-Lay, first did in tomato, and I was part of the initial team at Frito-Lay who did those contract farmings. To now, we still see no third entity other than government doing it. So what I would say is, we need to look at price discovery in a very different way.
Right.
And that's where electronic spot markets have come into play. The power of markets has not been unleashed, so to say, because today we see every entity trying to create an agri stack. Now, if you look at mutual fund industry or equity industry, what Jiroda did there, that's the right piece to look at, because building an agri stack by everyone and running it is not going to be a cost-effective proposition. Sure. That's where entities like Beam could really play a great role, where we are trying to come up with a platform where every entity could actually not only discover their prices at a very, very low cost, but they can focus on their core. Some of us are resellers. So most of the entities which are today in the agri-fintech space or in the tech space, they are essentially resellers, supplying, aggregating from farm and then supplying to a consumer. Now we need to have a platform which is far more effective.
Sure.
And you don't have, each one of us need not create that. Someday that's going to have a huge impact because there is not enough margin. So I think that plus export from a policy perspective, I would say that we need to add, I think I would add to what Amindra said, please add one I there, PPEI. You need to look at entrepreneurs who have disrupted markets, though they may not be entrepreneurs in that sense because their salaries are guaranteed, but job is equally or even tougher. And the last part is on the policy front. We need to look at India as a food surplus nation. Any markets we are creating, be it ENAM or a state market like Karnataka, which we created in REMS, there has to be a public API. Government's job is policy making. And executing has to be left. There has to be a public API where various markets could integrate with that. Because it's not an input network we are talking about like a GST or income tax network. A market is a very different entity, and that's where roles of exchanges or e-markets come into play. Thank you.
Mr. Sinha, thank you very much. Right. I mean, I kind of agree with what you're saying. I think what needs to sort of definitely be done is increase the number of people who are participating across these markets, right? And I think that's something which is very, very critical. I think building that awareness is, I think, very, very important, right? And I kind of agree with what you're saying, right? I think price discovery has to happen in a very transparent manner, which I think you are enabling, right? And I think how I want this conversation to go on. But I think, I think one thing which is common across all conversations, and everybody's alluded to it, right, in some form or the other, is the requirement and need for digitization. I think the new consumer paradigm is extremely complex, right? Consumer is very, very demanding, which essentially means, like I said at the outset of the conversation, right, it's going to put in a lot of pressure on the entire supply chain, right? And the expectations, right? I'd love to very quickly, Burgess, I'm going to come to you, right? You are leading that initiative at Godrej Agrovet, right? I'd love to hear from you. What are some of those things and changes that you're doing, in the given circumstance, right? What are some of the implementations that you've made, which you think are important as we enter a very different kind of an India, right? Aspiration, like I said, right?
Ashu, can I add a question for Burgess?
Yes, please. Yes, please.
So if you look at digitization for dairy value chain, I think we should keep in mind that a lot of dairy farmers are women, right? So do we see a different rate of adoption in dairy industry as far as digitization is concerned vis-a-vis other conventional chains? I think that's one question. Secondly, we are seeing a lot of platforms emerging in the crop agri-tech space, like Dehat and Sammunati, right? Do we see an opportunity for platform in the dairy space? It's where it's not about just milk procurement or selling feed, but also providing vet services, providing cattle loans, providing cattle insurance, stuff like that. And if there's an opportunity, what role Godrej can play in building it?
Yeah, those are great questions, Ashu and Hemendra. So I'll start with some of Hemendra's questions on the gender angle. I think just the digitization is so low. I haven't really even studied the gender angle, but it's important to keep in mind for the future. In terms of platforms in animal husbandry, there's definitely much less than in crop agriculture, but there's incredible opportunity. At Godrej Agrovet, we've always felt that animal husbandry is in some sense more attractive than crop agriculture for a number of different reasons, being less climate dependent, more regular payments to the farmers, because it's not just that you have to harvest, in these 2 seasons, you're getting output from the animal throughout the year. So that's also another reason. And there's even been some evidence to show that there's less farmer suicides related to farmers who are doing animal husbandry rather than crop agriculture. So definitely tremendous potential over there. It will be good to have more startups entering that space. We ourselves have been partnering with Sammunati and HDFC Bank on giving loans to farmers. It's a tripartite agreement with us in HDFC, for example, where as long as HDFC sees that the farmer is supplying milk to us on a regular basis and has been doing that in the past, that farmer can avail of a loan from HDFC that can contribute part of the purchase price of cattle from us that have been shown to be more productive than a lot of other cattle. So, working together throughout the system, we can definitely evaluate where the risk and improve productivity to farmers and efficiencies. I hope I've answered your questions. Anything else that you'd like me to comment on?
I think you did, right. I think and how I want these conversations to go on, right. I mean, typically, I mean, there's just so much of intelligence which is there, right, across each stakeholder. And, you want these conversations to go on, right. Unfortunately, gentlemen, there's a paucity of time. I would want to. My apologies. I would want to bring this session to a close. We're going to head into our next panel, but Asia Tech team is going to reach out to each one of you separately. We would love to do focus sessions, right? And like I said, right, there's just so much of intelligence. We would love to cover a lot of these aspects, right, across those sessions. Agri is something which is very critical. It requires more time, right, for us to deconstruct. I think each and every piece, right. Thank you so much for taking the time out. I'd request Aditya for us to move into the next panel. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you very much, gentlemen. It's a wonderful discussion all about the insights and the evolution of the Indian agri ecosystem. Thank you very much for spending your time here and being at Asia Tech Journal. With that, we'll move on to our second panel of the day. Improving agriculture supply chain and creating connected markets through digital intervention. I'll take the privilege of introducing the panelists. Nikhil Tripathi, co-founder Bijak. Varun Kurana, founder and CEO of OTP. Milan Sharma, co-founder and CEO of Intelo Labs. Uttam Gowda, founder and CEO Captain Fresh. Krishna Kumar, founder and CEO Cropin. Kishore Jha, founder of Ergos. Mr. Amit Sinha, co-founder of Unnati. The panel will be moderated by Ashu Agrawal, India Advisor, Asia Tech Journal. Over to you, Ashu. Thank you.
Thank you, Aditya. Gentlemen, it's a pleasure to have you with us. My apologies, we're running a little late on this one, but we look to keep it very, very exciting. I think there was a phenomenal panel that we had the first one, right? A lot of traditional players, who've been in the agriculture space for a fairly long time, and I think I think each one of them highlighted the need for innovation, right? The need for digitization, right? And the need for disruption. And I think the good part is that everybody's talking of collaboration. Given agri is a much larger play, right? They understand that I think there are startups can actually solve for many problems, right? On the ecosystems that they've created, right? The large supply chains and the value chains that they've created, right? This becomes important to play, right? A lot of you are disrupting a lot of that, and I think what is also important is a lot of these activities that continue to happen in an offline setting, right, were not necessarily structured or institutionalized, right? A lot of you're structuring that, institutionalizing that, right, in your own ways, makes it a very interesting, panel to sort of look forward to, right? But before we do that, a quick round of introduction would be helpful. Nikhil, we'll start with you. If you could introduce yourself and tell us a little more about Bijak, that'll be very helpful.
Hello, Ashu. Hello, everyone. So I'm Nikhil, co-founder at Bijak. At Bijak, we are trying to come up with a B2B trading platform for all the agri traders. Traders across India use Bijak as a platform to optimize upon their pricing as well as logistics. At the same time, we have started helping them with solving their working capital crunch. So far, we deal in close to 100 different commodities and more than 25,000 traders across India. And yeah, looking forward to grow.
Awesome. I'm going to come to Uttam. Uttam, I see you in my screen. Uttam, it'll be lovely if you could tell us a little about Captain Fresh and yourself.
Hey, thanks, Ashu. Great to be here. So yeah, I'm Uttam. I'm the founder of Captain Fresh. At Captain Fresh, we are trying to build a modern supply chain for fish and seafood. As an approach, we are trying to start with a B2B marketplace. And all the themes that you've been talking about, which is both digitization and innovation at various aspects of the supply chain, we're trying to embed them, because this is one of those categories which is, while it is very ancient, but not much of technology adoption has happened over centuries. So we're trying to change the way some of these things work at Captain Fish. Maybe as we speak, we can go into details. So that's where we are.
Super. Captain Fish. Looking forward, Uttam. Looking forward. Miral, I'm going to come to you. There is some great work that you're doing in Intelo Labs, right? I think it's become a reference point for, I think, many startups, right? I think you've been the early movers in many ways, right? With what you're doing. Tell us a little more about yourself and the good work that you're doing at Intello Labs.
Right. Hi. Great to be here. Thanks for the opportunity. Uh, uh, so what we do at Intello Labs is we are digitizing a quality of fresh produce.
Right.
It's very important. Like in the milk industry, we all know single tone, double tone, full cream, and it's being traded on the fat content. But unfortunately, for other commodities or produce in the agri chain, those standards don't exist, and there is no scalable way to implement those standards. And hence creates friction in the trade, be it from a retailer to a consumer or farmer to trader to large aggregator, and so on and so forth. And hence it's very important and critical to have first very objective definition of what quality is, and then have tools around that which can facilitate the implementation of those quality. And that's what we build in Intello Labs. Thank you.
Super. I'm gonna come to Krishna. Krishna, there's some great work that you're doing at Cropin, right? I think the good part about this panel is I think I have some of the marquee champions of who are really sort of transforming the Indian agricultural ecosystem. Krishna, I would love to have a quick introduction and a little about Cropin.
Sure. Thanks. Cropin is a deep tech company in agriculture value chain, and we are trying to solve some of the complex challenges for our partners and customers using data and AI sciences. We are working in Southeast Asia, Africa, Latin, Europe, now North America as well. So we have touched upon 52 countries, and our solutions are getting used by most of these enterprises when they're trying to work in various value chain, or trying to solve some of the challenges on digitization or predictability, or making the farm traceable or making it more sustainable, right? So these are some of the challenges they are trying to solve using our solution. And if you look at the diversity, I mean, we touch everyone who is interacting with that 1 acre, that asset or plot which is producing. We believe that is a factory which is producing something, and you will see, right from CPG companies, retailers, input side of the businesses, banking and insurance, farm equipment. Everybody is interacting with that one asset, right? So they're doing business, either they're procuring from them or trying to sell some services to them, and they need this CRM which we have built. We have built two sides of it. One, our first product helps them to manage the crop value chain, digitize it, improve the quality and the productivity at the farm, make it more sustainable. But the second product, which we have built on around 8 trillion data sets, which we have collected over 10 years from 52 countries, very diverse data set, and that is helping us to build world's largest crop knowledge graph, which is fed into our AI model. And we are building a general AI model which can learn from not only data from India, but different part of the world, and quickly scale up with a consistent output, right? So can you predict potato across India? Can you take the same model and run it in Kenya or Latin or in Europe, right? So how do you build these general AI capabilities in your model? Now this is solving two problems. One, you're solving the problem of today, where you're trying to light up intelligence on a plot for your customers to improve the per acre value, but also for tomorrow, when you're touching upon food security, building climate resilience in your agri business and along with your farmers, and working towards the carbon and sustainability aspect. So we do micro intelligence, and we are also now doing country level compute to help you understand 10 by 10 meter how those plots have behaved in the last 3 years and what is happening right now. So I think that's the positions we have taken. Yeah.
I think I have a bunch of questions. I think, Krishna, for you, and I think it's important, right? I think what you talked about is something which is very, very critical. A lot of these players, right, need to be enabled much sharper, right? Because the consumer side expectation has kind of changed completely. Varun, we've known each other for the longest time, right? I'd love you to introduce us to OTP. You're solving very critical consumer side challenges, right? So you're essentially building a farm to fork sort of a play. Tell us a little more about that. A quick round of introduction would be helpful.
Thank you, Ashu. Thank you for having me, and it's great to be amongst this panel with some of people that I've interacted with over the course of my 5-year history in the agri-tech industry. So, see, we are fundamentally a farm to fork supply chain company for
Right.
fresh produce. See, India as a country, we don't have cold chains. So if we talk about perishables, it becomes very important that you move them as quickly as possible post harvest to their end destination, because the
Right.
longer you take, the more you're going to degrade the freshness and the more wastages you're going to increase.
Right.
So that is the problem we solve by doing that in a less than 12-hour time frame through a unique community group buying model, which is via what we call our community leaders, who aggregate orders within their neighborhood and would then also do last mile logistics, which happens in just like 1 or 2 hours. So they're able to move produce quickly.
Right.
So that is the model. We move about 70, 80 tons of fresh produce through our system every day over a reseller, or I'd say a community leader network of more than 10,000, working with, I would say, almost 10 to 15,000 farmers, and serving more than 2 lakh plus consumers in Delhi NCR every day.
Wow, very interesting. Thanks, Varun. Amit, I'm going to come to you. Amit, you've been an industry champion, right, at what you were doing earlier, right? And I think now you're kind of disrupting, the agri-tech ecosystem, or, in a very different way, right? Tell us a little more about that. A quick round of introduction would be helpful. You're on mute.
Yeah. Thanks, Ashu. At Unnati, the whole idea is how do we digitize the agri ecosystem, especially the chain around the farmer. So while there's a long chain, as you can understand, both reaching to the farmer and coming away from the farmer when we talk of the input and the output side. Now, this part is pretty much unorganized and totally non-digitized today. Okay, people have a lot of solutions, but they don't have a way to reach out to the farmers directly. And that is what we are creating at Unnati, a sort of a digital platform which can be accessed directly by the farmers and the other first level ecosystem players around the farmer.
Right.
So today we have a network of more than 16,000 points that we call U stores, who are digitized delivery points for the farmer to interact with. And more than 2.75 lakh farmers have already transacted by the platform. So that is where we are today. And obviously it's a start of the journey, and there's a whole lot of stuff that we are doing and we are building up in terms of the digital solutions, which we feel that our farmers lack today. And farmers, being the largest mass of producers that this country has, is the prime sort of a segment where one can have a lot of digital tools for them to manage their business better and then build a better farming overall.
Super. What is interesting about this conversation is, and I think each one of you is kind of solving for a very different challenge, right? And I think the kind of ship we are, which is a fairly large size ship, right? I think each of these problems are extremely critical, right? And I think I would want to apologize right out the outset, right? I might not, these are conversations I would want these conversations to go on, right? Independently, right? Something that we're going to pursue beyond this session, right? But I think we're going to try and break down each and every aspect, right? And I think I'm going to try. I think one thing which is a common constant, right? Agriculture used to be something which was, a default choice for many people, right? I think COVID has kind of really changed our priorities as consumers, right? So I would want to crack this problem from a consumer side of it, right? Varun, I'll come to you first, right? Is that, you essentially one of those players who's essentially solving for the last mile, right? In the sense that, you're getting to the consumer, right? What has happened is COVID has brought in a very different kind of a sensitivity. And I think it's been pivotal, right? Somebody in a conversation said that we've almost hit a reset button, right? And I think we have, right? I think today we are very, very careful in terms of what we're choosing, what we're consuming, right? Now, what that essentially means is that there needs to be a lot of institutionalization of practice that needs to be done, right? And I think each one on the panel, right, is solving for that in some way or the other. I'd love to understand from you, what are you witnessing? I mean, you were operating a business which was pre-COVID, and you've been operating a business which is within COVID. You kind of, the demand has kind of exploded. You've seen that firsthand, right? I'd love to understand from you, how has that sensitivity changed, right? How has that behavior changed? And do you think it's a consistent behavior that we're going to have for a much, it's something which is going to continue to be with us? Or is this something that, we are an economy which readjusts very quickly, right? Do you think we're going to go back and readjust to, what we did earlier? What's your sense of it?
Thanks, Ashu. Yeah, there's some interesting trends that we have seen during the COVID time. So, typically as soon as, we have had two COVID waves. One was, March end 2020, And then the second one was which hit around April of this year. And I think both have had their peak phases for about 2 to 3 months. Now, during those 2 to 3 months, the behavior that we saw was that there was a sudden spike in our orders. So, the few things that we saw. So, for example, we saw a lot of senior citizens who were otherwise not very savvy with tech. So, they would want to order from the app. Obviously, they did not want to step out. So that was one. And second thing was that, they are very picky about freshness, because when they go to shops, they pick and choose. And when they tried us out and they saw that the freshness was, as good, or I would say in most cases better, so they stuck onto it, and they basically had their community leaders guide them with respect to how to use the app and technology. So we have seen a lot of this behavior happening, where a lot of I would say relatively more senior people have gotten accustomed to using tech and are now ordering online. And for a lot of them, actually, when I ask them, they say ki OTP was our first app जिससे हमने online order किया. So that's a very good sign. Now, post-COVID, the trend that we also saw, Ashu, was कि the orders which picked up during COVID, तो COVID के बाद गिरे भी हैं, मैं ये नहीं कहूँगा. So see, but the interesting thing was that we did not see a decline in the number of orders. What we saw was that the average order value went a little bit down. So what happened, I think, was कि the behavior of ordering stuck through. But maybe because few other options opened, or let's say when I start going out and when I'm going down, aam wala dikh gaya, so I just bought it. So then they may not have bought it from OTP there. So I would say we saw good trends where people have gotten accustomed to technology. They have adopted it, they have ordered it, and once the COVID wave went away, they still stuck through it. So that is the trend that we have seen.
Interesting. Varun, what's the institutionalization aspect, right? Are they more willing right now? So, for example, something that I've noticed, right? People want it to be nicely packaged, for example, right? They want to be very sure of what's coming to their household, right? Is this something which is the new normal, right? I mean, is this something that you think is going to go on, right? We're going to be extremely sensitive as consumers, right? I think we are part of the same lot, right? We want to be very sure of our health, our family's health, right? Our kids at home. Do you think that's the new trend, right? Where we would want a certain sense of hygiene, sanity, right? When certain produce gets delivered, right? And it could be a fresh produce as well, right? Do you think that changes companies?
Yeah, so that is another change that we are seeing, and the change is actually more from the top of the pyramid. So what is happening is that we are seeing that the more affluent people are more sensitive. Right. When you go down the pyramid, so then the sensitivity decreases relatively. When you go down, then fundamentally two parameters come into picture, which is price versus quality. So it's like if I'm getting it good quality at a cheaper than market price, so people order. So in our case, for example, we even have people who are staying in like EWS, parts of Delhi NCR, economically weaker section जो societies के होते हैं. So from there also people order. But I would agree that the trend is setting in. People are becoming more conscious, and the trend is more towards the top of the pyramid.
Interesting. Thanks, Varun. Uttam, I'm going to come to you. Milan, I'm going to come to you. Right? I think the two of you are essentially solving for standardization, right? Which is very, very critical, right? Uttam, I'm going to come to you first, right? I mean, you are essentially in a B2B environment, right? Now, a B2B environment is an extremely sensitive environment, right? I think what we spoke of, Varun, what Varun spoke of, is a newer changing tendency, and I think that's a tendency which is kind of setting up, and that's a horizontal, right? It's setting up. It's coming in across the board, right? It's coming in across the country, right? Across categories, classes. Of course, some are deeply sensitive, some are getting to that point, right? B2B is an environment where quality has always been very, very important, right? And seafood is something which, of course, there are many, many cottage industries which are kind of thriving, right? Within that, can I request everybody to sort of put their mics on mute, please? While we okay. Now, what happens in an environment like that, right? You are essentially sort of playing in that, right? Post-COVID sensitivity of B2B, right, which has been deeply hit, by the way, right? I think has gone through the roof. They want to be extremely sure. They want to communicate with their customer, right? Because this is, like also Varun alluded to, right? This is an extremely sensitive segment, right? Which is entering these, say, places, right? Consuming, right? They want to be very sure of, what's happened, what's not happened, what the standards are. What's your sense of it, right? Do you think, one, of course, the sensitivity is high, right? But do you think there's going to be how have you, I mean, is there a change that has happened in the process? Right? Sensitivity from what it was has gone up, which has now become part of their core communication strategy with their consumers, right? As they want people to come back into their, say, fold, right? Come back into consuming it. What's your sense of it, right? How do you break it up?
So, Ashu, to begin with, the sector we are in, the fish and seafood sector that we are in, is fairly primitive. Even by the standards of fruits and vegetables, they're fairly primitive.
Right.
Now the impact of COVID is very different for very different markets. Let's say a Bangalore, the impact is different versus, let's say, a Mysore, because the construct of the supply chain itself is very different into these multiple tiers of markets.
Right.
So if you take Bangalore, the construct is the fish comes to a local wet market where you have a Russell market or a Hoso market, and from there it travels to multiple retail avenues, right? Now in a COVID environment, that channel broke. Basically, these are all very overcrowded environments, and these channels were definitely under stress. And when these channels broke, there was definitely a search for an alternate channel.
Right.
It's not that a platform like Captain Fish could really provide that alternative to Bangalore, because obviously we were not scaled up from a pipe standpoint. Our pipes were not large enough to kind of become the complete alternative to the Russell markets of the world, but there was a search for an alternative, right? So it essentially meant that yes, while quality is a key parameter, the simple thing of fulfillment became a even more critical parameter here, right? So that's point number one. And point number two is what you made in terms of quality, right? In terms of quality, one is the quality at which you purchase, and second is the quality at which you're able to get the product across to the customer.
Right.
I think where we are able to play a role is, at least at this point in time, is quality at which we are able to deliver the product across to the customer. Because we are dealing with the category in the right way, handling it in the right way in terms of cold stain and handling all of those things, the deterioration of quality in our supply chain is much more I would say customer friendly compared to the deterioration that you would see in an alternative supply chain, right? So what this means is that we may pick up product at any kind of quality, but because the kind of supply chain that we built, the end customer is going to receive it at a much higher quality compared to a traditional supply chain, right? So that is where we have been able to add value. Now, if you double click on this two things, then how do we improve fulfillment and how do we ensure the quality is taken care of or maintained? From a technology standpoint, it actually is two layers. One is we are able to digitize the supply chain to have the transparency and visibility in a real-time way in terms of where product is at what time, etc. And second thing is, to an extent, we are able to automate a lot of activities within the supply chain, which enables us to move great volumes in the pipe. Right? Today, we handle close to 35 tons, 40 tons of fresh produce on a daily basis. In a category where average selling price is anywhere up to 200 to 50 rupees, which is very sensitive, right? It's a 2 to 3 day shelf life product. The automation becomes a big lever to make this happen, and to do this consistently on a daily basis, automation becomes a big lever. So I would say those are the two levers, and fulfillment and maintaining quality was the two key critical factors where customers were sensitive for, and that's where we were able to provide and become a digital alternative to the traditional markets.
And I think also the fact that the B2B environment has become very sensitive to it. I think they want that entire traceability, right? Milind, I'm going to come to you, right, on that point, right? You're solving for that problem for a lot of people in that zone, right? Tell us a little more about it, right? What's been the adoption increase, right? Given the higher sensitivity in the consumer side, right? What is it that you've experienced during this time?
Right. So I think the COVID wave may be over, but COVID is not over.
Right.
And there is just to give you some overall context, we work in fresh space, fruits and vegetables. and the overall production is anywhere between 7 lakh tons to 10 lakh tons. And to give you perspective, the biggest of the biggest are in some 1,000 tons per day.
Right.
Which means the organized segment or organized retailers are very, very low penetrated. And most of the value chain still works on non organized segment, even to the consumer side.
Right.
So there is what we have seen is two major things in this phase. First is shortage of labor, because majority of labor moved who used to do value addition like sort, grade, pack,
right,
in the value chain. And second major thing we have seen is on the discovery itself of produce, not just from farmer, but also from aggregator and also from trader side, because mandis and APMCs were not all active, all 100% throughput. So these are two major things which has driven impact on the consumer side on the quality and availability angle, because when the supply chain breaks at the back end, because of either labor or undiscoverability of farm produce, these things break. So what we have seen for our business and for our clients are the importance of mechanization and automation from machinery has gone up.
Right.
And we've been seeing a huge surge on the whole mechanization of the process and make it as independent of labor as possible. That is one. Second is on also the discoverability part near the production market for few commodities. Not all commodities and produce are local in production, right? For example, leafies mostly are local in production. Wherever they're being consumed, that's where it's grown, because the transportability don't exist. But for the high shelf life produce, where the production market is huge, discoverability is again is a big challenge. And I think these two things are one of the most important things that we being able to that we've seen surge for our business as well. So I think and then availability and quality is going to keep impacting consumers, and probably lesser on the price sensitive side. But I think food is one of the most critical element which people want to eat. So I think these are the two elements that we have seen impacted.
Very interesting. Krishna, I'm going to come to you, right? I think there is there's this huge focus on traceability, for example, right? We're seeing a huge focus on traceability. I think today corporates who are involved into say contract manufacturing, or I think anything, right? Or even if they're doing process, if they're in the processed food area, right? They want to essentially understand the value chain much better, right? They want to calibrate a lot of it, right? You're essentially in that zone, right? How has that, for example, changed, right? That also becomes important, because like something that we discussed in the first panel, right? The consumer side expectations have changed, right? Largely because the influence has changed. What that means is that we're going to be an extremely dynamic setup, right? Where consumption is not going to be as consistent. We're not going to have products which have a 5-7 year life cycle, right? We're going to have products which are essentially going to fly very quickly, and then there's going to switch, which is going to happen, right? What that means is that there is going to be extreme stress, which is going to be there, right? Now, given you're doing a lot of this, you're essentially helping these organizations to predict that environment better, right? What do you make out of a situation like this, right? We are in a different zone right now, right? It's going to be extremely complex. Traceability, like I said, is very, very important, right? What do you make out of the current situation, right? Going forward, we're in a very, very different market. Internal arbitrage is kind of went on, right? From a consumer standpoint, tier A has similar expectations, tier 2 has similar expectations, and this is more India focused, right? You're essentially helping these people, these organizations understand the paradigm better, right? What do you make out of the complexity, right? The predictability in the environment. You're in mute.
Yeah. So I think traceability is a very important part of ag digitization.
Sure.
And that solves many challenges. One, once you decide to do traceability, actually you are getting into digitization. Once you do the digitization of your crop value chain, you are talking about generating a lot of data, how the crop was produced, what chemicals went into it, right? And that's where, and then everything starts from there. If you want to grow a food in a country like India, and you are either a processor or a retailer who's in shipping it to your consumer, now consumers are getting more aware. They want more fresh food,
right?
Safer food, and they want to know where it is coming from, right? And when you are trying to ship that produce from one country to another country, then you have to meet the compliances and MRL limits or chemicals, what are the residue on those foods. And that is also affecting our health today. The new diseases coming up, and the health expense has gone up. And that's because what we consume. So I think traceability is in demand. I think government also is focusing a lot. We are working on some of the programs in Punjab where all the seed farmers are getting traceable QR code, which can and the consumer can also trace it back. It also solve for the spurious seed in the market. So you can't just sell a seed which is not the valid one, right? So traceability is one of the important things which we have seen as a shift, because now what you consume, people don't want don't want the viruses or chemicals which can impact their health. So that's what we have seen. But one of the things which has emerged during this pandemic, the reconfiguration of supply chain has happened, but they are looking for remote capabilities. Right? So can I map my crop value chain without having a lot of manual intervention? I don't have to go to the ground. I'll give you a few examples. In India, we worked with one of our clients who wanted to map the paddy farms in West Bengal and also in Bangladesh. So they wanted us to compute, and they said, can you figure it out? Where are the paddy? What is the total acreage? And within that paddy, can you figure out one variety which we are very interested in, which is a flood resistant variety, and we want to do the comparison. Now they could have done the survey, point surveys, but they said we can't get to the scale, and technology can give you that scale. So we computed the whole country as a Bangladesh, and we told them where is paddy and where is that particular variety which you're looking at, and how it is performing in that region and inside the West Bengal. Similar problem was with one of the food security issue in Nigeria, where Nigeria depends on the wheat because they eat a lot of bread, and they don't have a lot of data, right? And they still have some data, 2-3 year old data, how the cropping pattern is happening in the country. But if you go to Africa, you have no data, and government has no, they don't know how much sowing will happen and how much volume they can expect. And they wanted us to figure out where are the wheat crop, and we mapped around 8 states for them, and we predicted what is the acreage in these states, where are those plots, and what the volume can expect. And to our surprise, one of the states, which is Borno, this season, the wheat volume is going to be less than half, and that's the largest producer of the wheat. And when we figured out what is the reason for that, first we felt that the model is not working in that particular state. But when we went to the client and we did the investigation, the reason which was given to us was because of the insurgency of some terrorism, like Boko Haram is present in that area. The farmer has said that no sowing has happened. So now a country, a state which was producing the largest volume of the wheat, is now going to produce less than a half. And if you don't have that information from the beginning, you will not able to hedge your risk from the country point of view, right? So I think these remote monitoring capabilities are also helping these the guys who are into the procurement from the farm to understand how the harvest will move, what is the total acreage grown in my catchment area, when to enter the market, when to buy, what will be the price pressure. So I think these intelligence are helping them to take a better decision and become more proactive, and to measure and improve, basically.
Interesting. Krishna, I'll just come to you in a bit, right? I mean, I want to understand, so what you're talking about essentially is very local form data, right? I mean, right, this is essentially all production level data, and you are essentially sort of cutting it across segments within the production side of it, right? What I want to understand is, when you fuse that data with the consumer demand, right? How is the behavior? And I'll just come to you in a bit, right? On that particular question, but I'm going to go right now to Nikhil, right? Nikhil, you are in a segment, and essentially this is more farmer focused, right? I'm going to come to you, and I'm going to come to Amit, right? Because you are essentially the ones who are essentially participating with the farmers, right? You are helping them in discoverability, right? Tracing becomes important in the entire scheme of things. Krishna highlighted that, right? And you essentially help them discover better markets, better pricing. You essentially give them that environment, right? What's been your sense of it? I mean, COVID has been unreal, right? It broke the supply chain completely. Like I said, the consumer side sensitivity has gone through the roof, right? Consumer wants to understand, right? I mean, they want to understand what kind of product are they consuming, what level of, for example, say protein are they consuming and stuff like that, right? There's a lot of that transparency, right? in an ecosystem like that, your role becomes important, right? Because this is a demand which is coming from all quarters, right? And also the arbitrage has gone down, right? So there is a certain homogeneity in behavior which is kind of coming in, right? How do you break it down? I mean, what's been your, for example, experience in this particular time, right? What is it that you've experienced? What is it that the farmers experienced, right, during this particular time, right? What's the kind of intelligence that is now also available for these farmers, right, from a production standpoint, right, through the course of time? I'd love to understand a little from you.
Yeah, sure. So as you mentioned, right after
Nikhil, you're on mute.
yes, hey, sorry. So as you correctly mentioned, right after COVID, the behavior has changed across sector, and of course, like we have seen a similar impact in agri as well. So we have seen an increase in volume up to like 5 times what we were doing before COVID, and the similar impact has been cascaded to these farmers as well, right? So most of the time, liquidity has been always an issue in India. So if we go to the root cause problem, why this price arbitrage exists, right? It's basically a demand supply gap, right? So right now in Maharashtra, the price of tomatoes were like 5 rupees per kg 7 days back. Today the prices are close to 22 rupees per kg, right?
Right.
The tomatoes haven't changed, right? It's the same tomato from same place, right? Coming back, right? More than 60% of our population lives in like rural area. So we have like right now close to 25% of rural people who are using any of the digital platform, with more than 50% of them using Facebook as a platform. So we have seen that people have started like trying new platforms, and especially these farmers, right? They have started experimenting with new platforms for liquidating, and there has been a shift in the, I would say, the crop side, the basically in terms of like what are the commodities which were the commodity flow map, right? So earlier we were seeing that all the costly fruits, right? For example, kiwi or dragon fruit, right? They were kind of missing from tier 2 or tier 3 cities. At least they were not visible on our platform. But now we have started seeing a trade on them as well, right? The fruits volume have significantly increased in tier 2, tier 3 cities as well. Of course, tier 1 cities were always spending a lot on their food. Similarly, there are many D2C brands which have started coming, right? So as you mentioned, right, consumer is now more quality sensitive. Like they have a mindset of quality as well along with quantity. So we have seen many D2C brands coming in. Of course, not most of them, they don't see themselves as startup because they are like traditionally run businesses, someone who was already there in this field and now they've started a brand of their own. Not very tech savvy, not very digitalized, but still they now are building a brand of their own. And most of the time they would see BJAT as a platform to solve their supply chain problem, right? So we have worked with like close to 20 odd D2C platforms in Bangalore, Gurgaon, Delhi NCR, and of course, people based out of Northeast as well, right? So this was our special interest when we saw people in based out of Kolkata or Guwahati. They are also concerned about their brand and trying to fix that up, right? So of course, through BJP, we have solved the price discovery problem up to an extent, I would say, but given the bitter truth, right, we are hardly doing 0.1% of total value chain, right? So it's not even 1%. And right now it's like $0.5 billion on an annualized commerce value, but it's not even 1%. So that's the scale of agri in India, right? Like when you have more than 500, I mean, close to 500 million people who are employed in agri value chain, you can understand, right? The people who are consuming this, and it has a significant impact on our GDP as well. For us, of course, things have been a bit smooth post-COVID because people have started experimenting it. And most of the time, these mandis, right, they were closed all of a sudden, right? So let's say if there is a seller of mango from Maharashtra who has sent his truck to Kanpur mandi, and all of a sudden the Kanpur mandi is closed for a day, right? He would want his truck to be shipped to a nearby destination because logistics is also an issue, right? We cannot send that truck to all the way to Guwahati, right? Driver won't agree. So we have to ship truck all the way from Kanpur to Varanasi or Lucknow to a nearest mandi to a credible buyer. And at the same time, we have to keep in mind the demand supply gap, right? Because if you send all of the truck to same mandis, the prices are going to crash. So when you talk at scale, right, when you talk about a truck which contains like 20,000, 30,000 kgs of a commodity, right? Liquidity is actually an issue, and because all of these are extremely perishable commodity, right? You have to come up with a very, I would say, strategic point of view. You have to think like on multiple parameters before choosing a buyer, and at the same time you have to ensure seller, right, he's going to get his money back, because most of the time these people, they would be more concerned about their principal amount rather than profit or loss, right? Profit and loss would be up to a certain percent of that trust, but the principal amount matters a lot. So credit risk has been a major factor for these people to shifting to platforms like Bijak or many other platforms coming, right? So that, I think it has been good for most of the businesses. Of course, like there have been personal losses, but I think things have recovered really fast in India compared to other part of nation.
Very interesting. Gentlemen, something that I want to understand, right? In the entire scheme of things, is that we're a very large ship, right? And I mean, Nikhil, you kind of alluded to it, right? Now, while of course, each one of you are operating in their own sets, right? This is not a complete reflection of the possibility, right, that India has to offer, and that's largely because we operate at many layers, right? And then of course it's a fairly complicated market, right? We have regional tendencies that also sort of come into the entire scheme of things, right? And we don't have enough data to sort of make a sense of this. What do you? I mean, how difficult, for example, is adoption in scale, right? When you're looking at this kind of a thing, right? You still have a market which is not sensitive to this entire thing, right? Which still needs to be brought to pace, right? What are some of those things that can be done to ensure that there is a larger adoption that happens, right? Because if the consumer moves, what will essentially happen is that everybody else in that value chain, the possibility of adoption of technology is going to be much faster, right? So, for example, what Uttam has to offer, right? There's going to be a much higher sensitivity around that, right? What, for example, Milan has to offer is going to have a higher sensitivity to it, right? But we are still talking of an urban market consumer, right? I mean, tier two is something which is moving. But what's your sense of it? What are some of those things? I personally believe we are getting into a very different kind of a consumer environment, right? Any movement that happens, right, is going to automatically lead into adoption of many other things in the process. What's your sense of it? What is it that possibly can be done to improve that adoption on the consumer side of it? Do you think communication needs to be better, deeper? What kind of sensitivity needs to be brought in, right? And I'm sure this is something that you deal with day in, day out, right? As a very critical challenge to increase people who are consuming from you, right, in a more institutionalized format. What do you make out of a situation like this? Varun?
So yeah, sure.
Yeah.
So from a consumer standpoint, see, I think this is going to sound a little naive, but see, fundamentally, I think it has to do with a lot to do with just the value proposition associated with that whole thing. So in our case, what we try to sell in the in the fresh ecosystem is that it is fresher produce and it is cheaper. It is fresher because we have spent less time from farm to fork. It is cheaper because we have reduced wastage from 35 to 40%, which is what exists in the supply chain, to actually almost 3% now. So we are able to do it cheaper, without really burning money.
Right.
So, that is the value proposition that we try to, communicate to our consumers. And I think, it also has to do with the, the strata of the consumers that you're targeting. So for example, if I look at India, right? So we talk a lot about convenience. Mm-hmm. Now, if you fundamentally think about, I look at my childhood years, right? So when I was kind of growing up, so, often it would happen ki, why don't you, walk a kilometer extra and then, get something which is 2 rupees cheaper from that other. We used to do that because, money saved is money earned, and that is what, we had learned.
Right.
So I think India, fundamentally, if you talk about the larger demography, we are a very value conscious, consumer, where, we want better quality, we want more for less.
Right.
And that is the value proposition that, we are communicating to our consumers ki, matlab badhiya bhi hoga aur sasta bhi hoga. So, that is, so far it's resonating very well. Mm-hmm. And, unlike a lot of other, players, and specifically, who are doing e-commerce, they would try to position themselves as a convenience play.
Right.
And I think the reality is that, there are takers for convenience, but there are fewer in a country like ours. There's only so much people can pay for convenience. So I think, that is the proposition that we are taking, and which is why we are seeing good uptakes. And when I say good uptakes, it crosses demography from, consumers staying in, high-rise societies of Gurgaon like Magnolias to even EWS consumers. So, and because they're seeing value for money.
Interesting.
So that is what we are doing, Ashu, and so far, it is resonating well.
Interesting. Amit, I'm going to come to you, right? I think there's a very interesting piece that you are kind of working on and building, right? A lot of what Varun, for example, mentioned of, right? What, for example, Uttam mentioned of, Milan mentioned of, right? Krishna mentioned of, right? I think at the end of the day, the producer has to be sensitized, right? It just becomes so much more important, right? Because now we're talking about a very different and evolved ecosystem, right? I think it's going to be just so much more transparent, right? With so much of technology now coming in, while I mean, of course, there is a challenge that each of their pieces are operating in a silo, right? But what is that leading into is more and more information, right? A more clear picture in terms of what has to be produced, and which essentially means that there is going to be a pressure on the production side of it, right? To use the right ingredient or say the input, adoption to, for example, financing, understanding the consumer behavior. All of this has become so much more important. I mean, agriculture till now has continued to exist in a silo, right? I mean, I produce, there is a certain support system that I had, there's a mandi structure that I have, and I can go on and liquidate myself, right? Now the possibility is very, very different, right? Consumer side understanding becomes important. What's your take of it, right? I mean, for a market which is now becoming so much more evolved, so much more exciting, very clear in terms of its expectations, right? Of the farming base will have to be aligned to this, right? You're somewhere, sitting in that zone, right? Where you're evangelizing a lot of this change, right? What do you make out of this? And what are some of the key challenges, right? When you're doing what you're doing? I'd love to understand a little more about that.
Sure, sure. So, very rightly put, this is one place where we feel that there has been a lot of gap.
Sure.
So while the market demand is there for various kinds of stuff, that market demand necessarily doesn't translate into what the farmers need to do in the farm.
Right.
And that is where our platform is very relevant and what we are building up. Okay. So, at the end of the day, the genesis of all of this is what seed you sow, what are the kind of farm inputs that you're putting into the field, and how you're treating your field. Okay, so your output, once it is out there in the once it is out from the farm, you can do only so much about it, because what parameters are really critical in terms of what is getting produced happen before the farm output comes from the farm. Okay, so that is where the focus for our platform is two things. One, the understanding that we are talking about, okay, in terms of the farmer needs to understand what produce is really required by the consumer. That understanding will not happen in a vacuum. That understanding will happen in the context of what he's doing. Okay, so if I go back and tell him, hey, this is a better seed, or don't use this pesticide because there is a pesticide residue that creates a problem when it comes to traceability for paddy, then the farmer will not necessarily listen to me unless and until I'm able to tell him the impact of that. If I'm able to tell him that, hey, you are using this, you're buying this pesticide, don't buy it, because if you're buying it and you are applying this pesticide into your crop, you might end up working out from the export market, and you'll only can do it into a domestic market because there are issues with this pesticide. Now, if I'm able to tell him and he is able to gauge that this is the kind of an impact that is going to be on his earning, then he can take a judgmental call whether he really wants to look at a higher price and play in the export market or depend on the domestic market. Now, these are the kind of choices that the Unnati platform is offering to the farmer in the context of what he is using and where he's selling. Okay, and obviously then there is a level of requirement of credit and other services, with the financial services, which will really help him move up the value chain, get better products, get better inputs, and produce better so that he can make higher earning out of it. Now, this is where we have seen a lot of adoption coming out from the farmers and as I said, the first level ecosystem there. So the agri input retailers who are selling. Okay, if we are able to help him serve his farmer better through these data-led interventions, that is where it becomes an interest for him also, because the farmer then sees him as a partner rather than somebody who is just pushing any random product to him. So similarly, on the output side, the first level of trader, if he can guide the farmer using the tools present on our platform and work with the farmers to identify the right quality and whatever is being produced, now again that impact becomes much more significant than otherwise. So this is where our platform comes into picture through various digital tools to ensure that the farmer gets the right and relevant information in the context of what he is doing in the farm, while he's buying the inputs, while he's using the financing, while he's trying to sell it to a to a food process.
Interesting. Amit, I have a question for you on credit, right? And to you and Uttam, right? And I'm just going to come to you in a bit, right? I mean, I have, Krishna waiting, right? Where I had put out a question to him, right? Which was essentially about using consumer side data and blending it with, a lot of on-ground data that you have available, right? Now, Krishna, that's essentially what we're looking at, right? Going forward, that's what we're looking at. When you talk about predictability, right? Unless you bring in consumer side intelligence, right? A consumer side possibility or potential of consumption, right? A lot of what we, for example, do, right, is again, a silo-based information, right, which does not necessarily yields into, the kind of efficiency that we want to build into the system, right? What do you make out of this, right? I mean, going forward, what do you see? How important is going to be to bring in those consumer side, data, consumption data, and blending it with, of course, a lot of what is happening on the ground, right? And then essentially helping large organizations navigate that.
Yeah. So I think this is already happening. So if you look at the retailers who are selling watermelon, if you go and buy in Hazaribagh, where is my native, I get 10 kg or 5 kg of watermelon. But when you're trying to sell in the metros, you want a very smaller one because the families number of people in the family is less, right? Then you have to partner with the farmer to convince him what variety of that seed need to be adopted, and then you have to also train him how to grow that. When we eat the potatoes, and that's how you see smaller watermelon coming into the market, right? So we can consume in one day. Now let's go back to the potato where the wafers are. If these companies doesn't work with these farmers on the wafer side, I don't think they're going to bring the quality which, let's say, when you eat Lays, that's so crispy and you don't see any burn on that. You know why that doesn't happen? Because they control the sugar content of that potato while farming. Right. So they will chop off the leaf. They call the process dehalving, and that has to happen at certain stage when there is a certain GDD has been achieved, and we measure it as a 750 growing degree days has achieved. Then the farmer has to chop the leaf to control the size of the potato and the starch in that potato, so that when you make a chips, it's very crispy, and you see all homogeneous. So I think this partnership is very much required, and what consumers are looking for. Right. So you are taking the demand. You want to differentiate your product. You want to give a better product to your consumers, and you want to understand how they are going to consume it. Right. Recently, I saw watermelon without seed has been launched by one of the companies. Right. So I think innovations are happening, and you have to partner with your growers to get that quality for your consumer. Right. And I'm also seeing the way they're influencing these practices by incentivizing them. If I don't chop the leaf of potato, it will grow in irregular size. Some will become bigger and maybe he will earn more. But he's saying, if you do the chopping of the leaf at this particular date, I'll pay you some cent more, right? So that farmer is incentivized to do that. If you are able to adopt certain practices, which is going to make your farm more sustainable, and I'm going to measure the carbon on your farm, I'll give you $3 per acre or $4 per acre. So there's new business models are coming up to work as a partner with the farmers to, while listening to the consumer, how the consumers are reconfiguring their food habits and they want to eat more protein and different kind of demands are coming up. They are working very closely with the farmer to meet those demands also. Right? Yeah.
Krishna, thank you so much for that point. Right, Milan, I'm going to come to you. Right. Now, what we're seeing is a huge, Nikhil mentioned about it, right? D2C is something which is going through the roof, right? There's a huge procurement which is happening. And, processing is becoming important, right? And this is being looked at as a solution for many, many problems that are out there, right? There are certain reports that say that D2C as an overall industry is going to be $100 billion, right? Food is going to be a very large component of that entire thing, right? Standardization becomes very, very important in that larger scheme of things, right? What do you make out of that opportunity, right? Given that they're going to need players who help them procure better in that supply chain, right? Krishna solving one problem, you're solving another problem, right? What do you make out of, how the markets are going to play out?
Right. So, I think standardization, if you see any industry, not just Agri, has an importance, right? When you standardize rooms of hotels, right? Putting towels, Wi-Fi, camera, basic security, or like a taxi that discoverable through internet. So standardization in any industry is a big opportunity, And I'll quote very interesting data by ABB, which is a global robotics company. So they marked digitization curve as an S curve, where ICT, which is information communication technology, sits at the top of digitization, and agriculture sits at the bottom. So the first inflection point is we are yet to hit that, where we increase the adoption of that. So standardization is key, and what it means for us is given the number of commodities and complexities, what we are doing is we are picking one by one and making sure all stakeholders in the market are adhering to those standards. I'll give you an example. So we do cardamom as one of the commodity of standardization. Now we are doing almost 100% of cardamom standardization through our tools. And it took us time for adoption because I think there are different players in market who have different ways to figure out what the standard should be. But we worked with government authorities and traders, auctioneers, market to get that deep market buy-in. I think that is what is for us. The way we see is we need to pick commodity and produce level, go very deep and standardize those as a market segment to make very simple, easy to understand grades. Like we understand luxury segment or premium segment or diamond. So we have created those languages which are easy to understand and easy to trade on. So I think that's what the way we think market gonna evolve. And since it's a complex value chain, we are focusing more on concentrated production commodities because local commodities are very hard to influence so many people across the nation. So I think the baby step we have taken is to focus on the produce and commodities which are concentrated in production.
Very interesting. I'm gonna come to you, Uttam. Uttam, you're essentially to fresh supplies, right? That's of course a high growth category right across B2B trade. But there is, I think everybody who's in that category, right, is looking at some way of processing, right, introducing some way of some element of processing in the entire scheme of things, and that essentially largely to improve the shelf life of products, right? And basically limit leakage, right? I mean, any of the, for example, the meat companies that you look at, right, they're now trying to sort of create a bucket where they have many such products, right? Is that something that is on the cards for you, given the ecosystem that you're operating in? Is that also a reflection of the improving relationship that you have within the B2B environment?
Yeah, absolutely, Ashu. I think just before answering question, I have spent almost 5 years with a global exporter where we used to process shrimps for global retailers like Walmart and Kroger's, etc. Right, and one of the things that is very inefficient about Indian meat and seafood industry is that the entire activity of processing happens closer to the demand. Right. And if you look at the global supply chains, what you see is most of this processing happens closer to the source. In that manner, the entire supply chain is very, very efficient because you're not transporting unnecessary components which is not consumed by the end customer. So I think that is a theme that we are trying to drive through, which is essentially how do we push processing as close to the source as possible, and in doing so, how do we enable a cyclicality of the proteins going back into the production, the waste offals that is there, how can that go back into the feed and the production environment, so that it becomes essentially a reinforcing circle, right? That's the second thing. And the third thing is, as we move into the processing side of the business, we are also seeing how do we enable more and more sophisticated sellers to come into the ecosystem, because this is one of those categories, because of the inherent complexities of this whole processing. You don't have sophisticated marketing channels. So how do we democratize this whole sales end of the industry is also what we are working on. So those are the three things that we are working on, and this is definitely a very key component of our existence. which is modernizing the processing side of the business, which is today very, very artisanal and closer to the demand.
Interesting. Uttam, how I want to sort of dig further on that point, right? But I think paucity of time. My last question in this panel, Amit, I'll come to you. It's very important to finance is something which is very, very critical, right? Be it pre-harvest, post-harvest, right? Across the entire value chain. You sitting in the middle, right? And I'll have Nikhil also to sort of answer this question, right? It becomes important to fast track. For adoption for incentivization, right? And for adoption to happen, it becomes important. Financing is something which plays a very critical role, right? How do you view that? I mean, you are in that unique position where you understand a lot of this, right? I mean, you're evangelizing a lot of that change, right? How important do you think, very instance-driven, for example, credit models need to come up, right? There's a different kind of relationship that you need to build, right? Which is very different from traditional lending mechanisms that we've had. And in any case, they're very, very archaic, right? Because they're extremely two-dimensional, right? They don't necessarily factor in a lot of other data that exists, right? There are a lot of startups are now bringing in. There are new credit models that are kind of being built, right? How important do you think that is to ensure that there is adoption happen? Because, like we discussed in the earlier question, right? I mean, farmers and producers will have to be part of the value chain. They need to understand what the consumer side is going to look like, right? And that's only possible when you incentivize them in a certain form and way, which could impact their income levels, right? And financing is important. How do you view this, right? And how important do you think is this, right? Because we still grapple with a lot of traditional practices, right, of doing many things, right? What's your sense of this?
So credit is obviously a very, or credit or overall in general financial services are very critical for this segment,
sure.
Especially because working capital requirements are very lumpy. There are moments when you would need a lot of working capital, and then there is a output happens after a few months and stuff. So you need investment to be sort of put into for that much period, and this is also this is where the importance and the need for the financial services goes up, and this is also which creates a challenge because the incomes are also not uniform, which is where most of the traditional lending models have been. That you look for a regular income for the person to full repay and some kind of an asset. Now, all of that makes it much more challenging for the farmer to access credit. And that is where the kind of data that we are generating in terms of what the farmer is buying, where he's selling, what is the kind of inputs and stuff that he's taking is a very key element of the credit service that we are building, because that will help us rate the farmer and the intermediary partners with newer data sets, which were earlier non-existing because it was not digitized. So instead of, let's say, digitizing, assessing a credit worthiness of a particular partner on his assets or the inventory that he's carrying, I would rather go ahead and look at what is the kind of credit that he's extending to his set of farmers. Okay, that becomes a very critical input into what will be the working capital requirement and how good or bad is his paying capacity. Similarly, for a farmer, if he is able to sell to a larger market and is more progressive, I'd be able to lend him in a much better way at maybe a better rate rather than the traditional methods too. So this is a very critical, and not only that, also simple, easy products which are present in the flow of the product. So so BNPL has suddenly become very hot these days, buy now, pay later. But then that is a thing that we have been experimenting with the last 1.5 years. And we have seen that there is a strong offtake of such credit because it's then very easy for the farmer to get nudged. A 5,000 rupee extra credit for a 1 acre might help him move from the traditional low value OP variety seed to a hybrid seed. And that can change his income in a 10x or 20x kind of a manner. So, these are the kind of aspects which we are able to throw up because of the digitization of the transaction at the farmer level that we are doing.
Very
so very different way of approaching credit and stuff, totally woven into the fabric of the agri industry and how the cycles play out in agri, which is quite different from any other industry.
Absolutely. I think that's very, very critical, right? Nikhil, I'm going to come to you. Essentially the last point in this panel, right? You are essentially also, in a very unique position to offer the credit, right? I mean, and there are certain bits and pieces that you worked upon, right? I'd love to know a little more about it, right? And essentially what I'm trying to sort of get to is, how will this and how can this change the the entire adoption possibility, right? Because that's very, very important, right? Of what Varun highlighted in the through the course, right? The sensitivity is very different.
Mhm. Yeah, sure. So I think almost 80% of India's agri value chain works on credit, uh, which it's essentially close to. So this 80% numbers comes out to be close to in between something like across $180 billion,
Right.
out of which typically our user, right? If I talk about users who are using BJF as a platform, they would need a credit of in between 3 to 15 days, basically to bridge their working cycle deficit. Now the point lies like every time you have to take a call, right? Whether my capital cost justifies my profit for this transaction or not, right? And since all of these are perishable, you cannot exactly predict your margin for each of these transactions, right? It may differ once the produce reaches destination, right? So margins are not very thick, I would say. So it always makes sense for user to take a call on per transaction basis whether he wants to take a working capital help or not, right? We have seen people taking working capital help of like I mean, people are willing to pay 1.5% for 10 days, and then there are people who are willing to pay 1% for a month or so, right? Because the margins are thin in those commodities. But if you see from a farmer's point of view, right, onion would get sold at 6 rupees per kg, and the same onion may cost 20 rupees per kg as well from farmer now, right? So if it's 6 rupees per kg, typically your a truck of 30,000 kgs would cost you 1,80,000. A farmer may give you his truck on credit to you if you are like a credible local aggregator for it, and then you may pay him back in next 3 4 days. But when this truck would cost something around, let's say, 5 or 6 lakh, right? The farmer would need a 50% advance or 60% advance. So basically, to meet his labor cost and other expenditure, or maybe to reduce his credit risk, right? In those cases, these local aggregators or suppliers would need a working capital help, where we tie up with various lending agencies and they use BJET as a platform to basically help them with working capital and charge a fee on it. Now, the unique positioning, right, comes over our platform is like we are in a position to basically actually judge these transactions, right? If you talk about all the financial institution, right, they are working as a financing company, but in silos, they don't have an actual knowledge of their current business. And most of these transactions are not digitized, right? So unless you have an actual hook-in transaction, or you are deciding who would be the buyer and you are assessing the buyer's credit risk, right? So in most of the cases, there is high chance of default if the truck or the commodity is not shipped to a credible buyer. So we have helped various people in almost like 20 odd commodities. For us also, it's like kind of experiment. But yeah, there's definitely a need, and I think it's one of those untapped sector, basically PSL, right, priority sector lending, where all of our financial institution or other lending startups have been suffering. And I think this all the other agri-tech startups, right, who are digitizing these transactions, they would open a massive door for all the lending institution. And of course, it's always going to be a collaborative approach.
Nikhil, thank you so much, gentlemen. How I wish these conversations can go on, right? I mean, I think each one of you is solving for a very, very critical, unique problem, right? And I think all of it, when you watch it from a distance, I think all of this is so much more continuous, right? I think there is definitely a need for more integrated kind of models, right? I think there's just so much of information which exists in silos, right? I think the newer models really need to be sort of worked upon. I think they need to be experimented with. And I think one thing which is very common, right? And I think this has been a constant across all the conversations that we had since morning, right? Is that a lot of consumer side understanding needs to be brought into a lot of production side data, right? I think while it's happening, it's still happening in a very happening with just about a few. I think this is something that needs to be brought to the producers. I think a lot of evangelizing needs to happen, right? And they need to be part of that core structure. Gentlemen, thank you so much. It was a pleasure to have you, each one of you, with us. My team is going to reach out to you. I'd love to do specific one-on-one sessions, right, with what you're doing. I think this is just so much more unique in that sense, right? Thank you so much for taking the time out. It was lovely having you with us on the panel.
Thanks for the invitation.
Thank you, everyone.
Thanks.
Thank you, dear panelists. It was a wonderful conversation, and your insights are going to be relevant in the future for a longer time, adding your experience and the exceptional models that you've been building in the Indian agriculture. Thank you, dear panelists. Adding your experience and Thank you. With that, I'll welcome our third panel of the day, Finance in the Future, Complexities of a Fragmented Market. I'd like to take the privilege of introducing you the panelists. Janavi Papiwal, Director, Avishkar Capital. Mr. Rajesh Ranjan, CEO of NAB Ventures. Nikhil Vora, Founder and CEO of Sixth Sense Ventures. Mr. Hemendra Mathur, Venture Partner, Bharat Innovation Fund, Co-Founder, Think AG. Mr. Shiv Shankar, Vice President, Ankur Capital. Mr. Anurag Jain, Co-Founder and CEO, Club. The session will be moderated by Ashu Agrawal, India Lead, Asia Tech Journal. Mr. Ashu, over to you.
Thank you, Aditya. Gentlemen, ladies, good afternoon. I am really sorry we are a little late on time, but I wish we were doing it in a physical format. I would have tried to make up in a different way. But no, it's good to have each one of you with us. I think this is a very, very interesting and important discussion. Right, given that we're talking about agriculture, we're talking about food, we're talking about many other emerging possibilities, right? Be it on the tech disruption which is happening in something which is been absolutely untouched, right, from a tech adoption standpoint, right? And there is just so much more information which is existing in silos to a new world consumer, right? Where we are looking at many D2C possibilities, right? And we're talking about food processing and product processing in a very, very different way, right? Thus, it becomes very, very important and interesting conversation. Quick round of introduction will be very helpful. Nikhil, I'll come to you first. I see you on my screen first. A quick round of introduction about yourself for the fund, that'll be helpful. And a little bit of a touch on your portfolio companies. That'll be a good starting point.
Sure. Thanks, Ashu, for having me on this. So I'm Nikhil Vora. I'm the founder CEO of Sixth Sense Ventures, which is India's first consumer venture fund. Right. Obviously, the idea is to really invest in the consumer of tomorrow today. And we've done a few investments in the agri space, or the agri ancillary space, so to speak. Right. One of them is Frazo, which I think NAB Ventures, Ranjan's also around, so he's also one of the investors in the same company. So I think it's an interesting space, it's an evolving space, and it's quite ironic because this is by far the largest space in the country. So it's quite interesting that despite being possibly a $700 billion space, you don't have a single player who's even 0.5% of that market. So right. I'm sure there'll be enough opportunities which will evolve there.
Interesting. Thanks, Nikhil. Ranjan, I'm going to come to you.
Thank you, Ashu, for having me. I'm Rajesh Ranjan, CEO of NAB Ventures. NAB Ventures is a VC fund focused on agri-tech, food tech, agri-rural fintech, and rural businesses, primarily in e-commerce, edutech, and health tech. We have made 7 investments so far, 6 startups, and most of them are doing extremely well. So we are extremely bullish on the sector.
Interesting. Janvi, quick round of introduction and all the good work that you've been doing.
This is Janvi Papriwal. I'm a director at Avishkar Capital. Avishkar Capital is a pioneering impact fund based out of India and expanded to Southeast Asia and Africa as well. Some of the core sectors that we invest in are agriculture and food, financial services, and then the other sectors that create impact on the bottom of the pyramid. We've made about 70 investments all across these regions. In India itself, we've made 60 odd investments, exited about 35 odd companies. We managed $400 odd million of assets, and yeah, going strong on our 6th fund focused on India now. And within agriculture, we've made several investments across the entire value chain, be it inputs, processing, dairy, output linkages, and going forward, agri would continue to be our one of the core sectors.
Super. Thanks, Janvi. Anurag?
Hi, thanks for having me over. This is Anurag. I'm a co-founder of Club. Club is a hybrid marketplace that provides growth capital to loved consumer brands through revenue-based financing. We're somewhat of a different species from the panel at this point in time. We don't do equity investments, but we facilitate investments as a revenue share. Just in the packaged food and food FMCG space, we facilitated 26 companies with capital at this point in time.
Super. Anurag, I had a very clear reason of having you, right? Because, this is a very different kind of financing, but also a very critical form of financing, right? And a growing form of financing, right? Shiva, I'll come to you.
Sure. Good to connect again, Ashu. Ankur Capital is an early stage VC fund that's involved in looking at technology solutions for the next billion. We've invested in 20 plus companies, and a decent chunk of our portfolio, about a third of it, is probably allocated towards agri-tech startups. And we've done it across a range of agri input companies, processing companies, companies that are on the agri output scale as well. So yeah, good to see a lot of familiar faces here. And the previous panel, we had a couple of our startups there as well. So we've invested in Cropin and Captain Fresh, from the ones I seem to have overlapped with from when I signed in early. And yeah, just good to connect with a number of partners that I know we've connected with over other transactions as well. So Janvi, Ranjan, good to see all of you, and Hemendra again as well.
Thanks, Shiva. Hemendra?
Hello, good afternoon. This is Hemendra Mathur. I work as venture partner with Bharat Innovation Fund. It's an early stage deep tech fund investing across sectors. As far as Agri is concerned, we have supported over 30 startups, mostly at the seed stage from the seed fund that we have. At personal level, I'm an investor, board member, advisor with probably 3 dozen agri-tech startups. So that's about me.
Interesting. Gentlemen, I am, this is an exciting panel, right? For a bunch of reasons. I think we're an extraordinary liquidity event, right? And I'd love to talk to you guys a little about that, as through the course of the conversation, right? But what I'm particularly excited and what I really want to understand is that, when you're investing, right? I think having a very critical reference point, consumer is a very critical reference point, right? And I think each one of us will agree to it. Now, when you look at agriculture, when you look at food, right? I think this is a little different in case of how Nikhil would say, for example, cut it, and how Anurag would cut it, right? From an opportunity standpoint, right? Typically, what happens is that there's a lot of silo-based activity, right? And I'm sure earlier panel also we discussed the same thing, right? Everybody's operating and solving for their own silos, right? A lot of the information is not coming together. What I sense is in a post-COVID environment, right? What is happening is that the consumer side expectation demand has to be now mapped and matched and synthesized with a lot of production side information. Unless that happens, it's going to lead into a lot of inefficiency, right? With that as a thought, right? Ranjan, I'm going to come to you first, right? You've been investing in some core key businesses, right? NABARD as an entity, right, which is the parent of NAB Ventures, right, has been a very key enabler in the process, right? How do you view the new emerging, relationship, right, between what happens on the consumer side and what happens in, say, for example, the production side, right, and for it to come together? What's the new model going to be like?
Great question. Thank you, Ashu. We certainly believe that a consumer in a pandemic world or post-pandemic world is increasingly moving digital online.
Sure.
So certainly D2C is a great way to reach those consumers directly, and there are other ways certainly, but I think D2C is the most transparent way, and that's what we really appreciate. Startups which are sourcing directly from farm to fork to the D2C consumers, they're doing a great job.
Right.
Primarily because as an investor, it gives me a lot of confidence and trust that there is absolute traceability and transparency in the system. Right. Because what has happened is somewhere, in this pell-mell quest for growth, there are questionable practices happening in the startup ecosystem, in particular, agri startup ecosystem.
Mm-hmm.
So as an investor, I think if there is more transparency in the system brought on by things like traceability, better monitoring from farm to fork,
right,
which means better quality assessment and so on, it gives a lot of confidence to consumers and also gives a lot of income boost to farmers. And that's what NABARD is focused on in terms of keeping the back end ready for farmers from an infra point of view, from a systems perspective, and from a connect perspective.
Right.
So I think it's an interesting jugalbandi of sorts, wherein farmers and consumers, coming onto the same platform. This innovative approach is lacking in some of the B2B market, B2B produce startups or other B2C. So NABARD brings to the table access to 5,000 plus FPOs pan-India basis in each and every district state. And also, more importantly, a lot of the market linkage startups, which is the B2C startups, actually need a lot of working capital more than equity. So equity is a costly way to go about building a business.
Right.
I think NABARD is geared to provide, through its subsidiaries, well geared to provide financing support on the working capital front. And that makes a lot of difference to the viability of startups, and in terms of it gets reflected in better per unit economics and other parameters.
Interesting. Shiva, I'm going to come to you, right? Essentially on this particular question, right? And like we said, there's consumer side data, and then there's silo-based data, right? We discussed with Cropin, which is one of your portfolio companies, right? In that part, right? This needs to come together, right? A lot of this interaction needs to happen, right? What do you make out of this entire possibility, right? Do you think companies which were, or startups which were possibly invested in, or which are solving for a certain silo, right, will have to change their model going forward, right? Because you are essentially invested in some of the companies that are in that zone, right? Which are in the enablement zone, the way I put it, right? What do you think is going to happen, right? Do they need to change that model going forward, right? Or do you think that if they continue to solve for their core play, will be sufficient, right? For them to continue to build their dominance in that game? How do you deconstruct that situation?
Yeah, so I'll answer it on two legs, Ashu. One is the question you asked, which is in the context of someone like a Cropin, which has developed this intelligence layer for really existing agri corporates as they exist. And they're doing it in a way that the information they're building out is actually not just relevant for Indian corporates, but actually on a global scale. So the company is already exporting the tool and just the intelligence system to 56 plus countries. So if you just look at the scale of what they have, and the potential for this to be replicated in other regions and not be an India local play, there's considerable room for startups like those to actually scale up and develop solutions first for other similar developing markets, and then scale up to other regions as well, where just the backbone of the types of intelligence and knowledge systems they've built up are for a much larger market than just our Indian context. So you don't need to get into the operational aspect of the agricultural process per se. But I do agree with what Ranjan mentioned of saying, especially when you look at the B2B segment, and you're seeing this widening also in just how organizations are involved. Earlier, you may have taken a fairly narrow region of saying, I work from optimizing from farm to mandi, and this is, there's still 2 or 3 other intermediaries that would normally be there in between, and I'm just able to go to the mandi and sell to an optimized version of a customer set that's lying there. And you're seeing the widening of that. You're saying now I'm getting closer and closer to the customer. So maybe you're not seeing them literally do a farm to customer's doorstep, but if you look at how many intermediaries you're taking out, progressively you're seeing a lot of these startups actually progressively moving either further back and integrating right from the D2C brands. And we've seen very conventional D2C brands also having to integrate and get involved on the supply chain to get product consistency. And you've had companies that have grown up saying we want to actually be a farm to fork model, and we haven't quite got the fork part, but we're farm and we're integrating deeper to actually expand out. So I don't think it's an instant switch, because there's a lot of data that actually is required for you to say, I'm going to do this full value chain, because you have to pick up a significant portion of the farmer's produce for them to value you. You can't go to the customer saying, here are 3 vegetables I'm very good at, and this is why you should come to me and not go to other channels. You have to have kind of comprehensive baskets on both sides. So it's important to kind of progressively do that as you're ramping up the business.
Very interesting. Janvi, Hemant, I'm going to come to you, right? Before I jump onto D2C, right? And I think D2C is something which is going to, my sense is, I think, given that it's a constant across, I think everybody was mentioned, right? We're going to spend a substantial amount of time talking about D2C, right? But before I do that, right? Janvi, you have a fairly diverse portfolio, right? Now, a lot of this portfolio, like I said, I mean, COVID has kind of hit, we've hit a reset button, right? The expectations is changing across all quarters, right? Now, how do you view this, right? I mean, given that you have a certain exposure, how does the strategy now sort of look like, right? I mean, is there a complementing strategy? Are you factoring in the newer world models and the expectations that are going to be there, which complement your, say, existing, say, for example, the value chain intervention that you have, right? Or business that you've invested in, right? Which are optimizing for those say, silo-based problems, right? How do you view the newer the emergence of the newer construct, right? Which is going to be far more interactive, which is going to be far more dynamic, which is going to be far more sharper and far more efficient, right? How do you view that going forward?
Sure. So let me take a step back and just explain that how Avishkar Capital looks at food and agri and impact, given that we're an impact fund. And for us, the idea of investing in this sector is to ensure that the farmers, the low-income farmers, nearly 85% of the 150 million farmers in India who don't have really access to markets, access to good quality imports, financing, etc., they benefit from our intervention. And the other aspect of impact is environmental, since a lot of climate change is contributed to by incorrect, improper agricultural practices. How some of our interventions can sort of help in mitigating some of the climate risk. Right. So coming from there and moving on, to markets, given that agriculture is quite a complicated, beast. There are several layers to it. It's fragmented. There's several middlemen. So we have invested, across different segments, and I can just pick a few and explain our thesis and how this expands to our next fund going forward. When it comes to climate, we all understand that rice, wheat, India is one of the largest producers. In fact, India is one of the largest exporters of rice from a time when we had food scarcity in 1960s, where we had green revolution, and to the point that we are one of the largest exporters of rice. But unfortunately, it has also caused a lot of degradation of our natural resources. In fact, we are also one of the largest water exporters by virtue of being a rice exporter. So some of these things have to change, and millets is a great example of how consumption patterns have and can in the future change some of the cropping patterns. So we invested in a company called Soulful. As most of you understand, millets are extremely good for the farmers, for the environment, for various benefits, as well as to the health of the consumer. But unfortunately, we stopped consuming millets. At least, the urban consumers stopped having millets since a very long time. It's not fashionable. It's not tasty. It's not aspirational. Right. But then came a company called Soulful who attacked the problem of taste, who gave it a new form and a new avatar, and a good brand which consumers would start to have. And hence, with the increase in demand of such products, with the increase in demand of millets, farmers now have a place to sell millets and earn high realization on their crop, as well as give back to the soil as well.
Right.
So those are the kind of I would say market interventions that we have done. Similarly, we have invested in a company called INI Farms. They are one of the largest exporters of bananas and pomegranates out of India.
Right.
And unfortunately, in India, the demand for great quality fruits did not exist for a very long time, and consequently, the farmers did not really get great realizations for even if they produced good quality fruits. But here, you've created a market linkage. You've created an export market for farmers by integrating the farmers' input needs with good quality supply chain in terms of cold storage, in terms of material handling, and of course, client relationships in the front end with the export orient, with the import.
Generally, I think what you're highlighting is very critical, right? I'm going to come back to you in just a bit, right? Because what you're talking about is a complete value chain, right? But and before we delve into that, right? Nikhil, I'm going to come to you, right? I think like I highlighted, right? I think COVID has been unreal in many ways, right? We've hit a reset button, right? A lot of what we consumed is essentially now getting institutionalized, right? And which is now being bucketed in D2C, right? There could be fruits, for example, right? I mean, today we get Adani apples, for example, right? We're getting different kind of pulses, right? We're getting processed and at various levels, right? That's the new emergence, right? That's the new consumer, and this is not something which is happening in a tier A or a tier 2, right? This is something which is happening across the board. There are plant-based meats, for example, that are coming up, right? You're invested in one of them. How do you deconstruct the current the current situation, right? Do you think it's here to stay? Do you think, we're a country which goes back to, doing what we were very quickly, right? Do you think it's here to stay? How do you really sort of make this happen?
Very interesting, Ashu. I always believe that, we keep talking about this pre-COVID and post-COVID behavior.
Right.
I'm a big believer of while generally there is this belief that, if you do something for 44 days consistently, you change behavior.
Right.
Personally, I don't think COVID really saved anyone's life. So I don't think that change in behavior is really going to happen. But what's really happened is that obviously it's accelerated the digital adoption. And obviously what would have happened in possibly 2 or 3 years has happened in 3 months.
Right.
That change is clearly very, very, very evident.
Right.
Having said that, I think, what is also interesting is that, we're talking about a space where it's got possibly the highest number of variables. You're talking about agriculture, which has got weather, farmer, and God, and government maybe. So 4 of the highest variables that I'm sure none of these variables are constant at any point in time. So it's a very tough category to break into. It's a category which, like I said before, it's almost a $700 billion category, and not a single player has got even 0.5% market share, which is very, very unique to agriculture. It doesn't happen in almost any other space that you look at. So clearly there is a crying need for someone to evolve and become relevant in that category. You did talk about this earlier, that there are fragmented players who are addressing individual need, but no one's really consolidating that category play. The irony also is that I think in India, what looks very virgin, which is what agriculture seems to be right now, organized agriculture in some form, tends to get overexploited in the very near term. So, I think Ranjan did allude to it in some form that, what looks very, very interesting and obviously a long short business to be invested at or be part of. I think sometimes you just see too much of overexploitation happen in the very near term, and thereby the economics of the space gets destroyed first before it starts to emerge. So I think as investors, that's something which we would always want to be slightly more careful about. When we obviously believe in the bigness of the category and so on. Second is, I think just one more part is that I think changeover is completely evident. I think that's clearly a given. But I think that, like in anything, transition will take some time, and transition will also happen in silos first and then get aggregated. So if you look at trigger points in agriculture, and if you look at financing as one option, or look at pricing to be another, or supply chain efficiency and so on, I think there will be players who will evolve, and there will be players who will also migrate across these chains at some stage. So I think that's something which you would be quite interested to look at, and hopefully we've been partnering with some of the guys in that space. Yeah.
Right. I think what is very, what I essentially wanted you to highlight, right, was essentially, and I think possibly we'll discuss this, right, is the institutionalization of consumption, right? And before I'm going to go to Hemendra, right? I think because Hemendra is somebody who's been at it, right, for the longest time, and he understands the various silos that exist, right? The entire value chain, right? In an absolutely brilliant way, right? I mean, what do you make out of this, the institutionalization of consumption, right? Which is now we are getting into an environment where there is, for example, for example, we are consuming, for instance, food, right? We talk about, uh, packaging, for example, to happen, right? There are hygiene that is happening, right? What do you make out of an opportunity of this?
Thanks, Ashu. Very good question. And I totally agree with you and rest of the panelists that the whole ecosystem is broken and siloed.
Right.
I always say if you talk about food and agri, it's like a bipolar disorder. The part of the same chain, but behave very differently. And the kind of entrepreneurs that have existed on both the ends were very different. The investors were very different. The kind of talent that you get in agri and food is very different. So that it has been kind of very, very broken. But what I would say in last 5 to 7 years, things have started to change. And I would attribute that to use of technology and unprecedented entrepreneurship that we have seen in the sector. I think that is what is making a truly vertically integrated supply chain possible. Of course, none of us wanted COVID to happen, but it happened. And for the first time in the history of India, we saw a farm to fork model. And I'm not joking. We always talked about farm to fork. But it took a pandemic. It took a pandemic for making it happen when farmer groups went all the way to residential societies and sold their product. Of course, empirical evidences, not at scale at all. But what I see that trend is likely to continue. There's a huge opportunity in vertical integration. It's very frankly, I did a research across all the supply chains in other parts of the world.
Right.
It has not happened to a large extent in most of the countries. Especially the developing countries. It's essentially last 5 to 7 year phenomena. If you look at China, there are companies like Mekai and Pinduoduo. Both of them originated in last 5 to 7 years. If you look at Africa, this company called Twigo. If you look at Indonesia, there's a company called TanyHub. All of them have come in the recent past. So it's not that it's India's problem. It has been the problem for the world.
Right.
So I think that's bound to change, and I definitely see role of technology, right from demand aggregation to traceability to supply chain management to inventory control to quality assaying. There's a bunch of tech which kind of will make it happen. So I think that's one change that we're bound to see. Another thing which can probably accelerate is if we can reduce the cost of capital. I think that's my biggest worry for the sector. It's abnormally high for smallholder farmers who's borrowing at 24%, 36%, even 60% per annum. The farm economics doesn't work. I say healthy EBITDA and a poor pet. That's the history of Indian agriculture forever. So I think we need to bring that cost of capital down, and that's where I see huge opportunity of merging agri-tech with fintech. That's my mission 2021, and I'm working with banks to make that happen. Look at unconventional ways of building solutions for farmer financing, right from farmer onboarding to risk assessment, risk mitigation, credit scoring, loan recovery. So I think those are the changes that I'm witnessing, and that makes me a little bit more optimistic that we will not see a very, very siloed ecosystem, at least let's say 5 years from now. I'm very hopeful that things will change dramatically.
That's a very interesting point that you've highlighted, Hemant, and I think that's very, very critical. I mean, I've spent some time on, for example, credit rating for farmers, right? It's extremely difficult, right? But I think on that point, I want to actually sort of go to Anurag, right? Anurag, you're doing Club, right, which is financing D2C brands in a very different way, right? I mean, revenue-based financing is a fairly new concept. It's a fairly new play which is getting built, right? But the fact of the matter is the way you, for example, underwriting these assets is absolutely phenomenal, right? Because, unlike any other institution, right, which goes out and lends in a very, an archaic structure, right? And nothing bad with that, but in a very archaic format of structure, right? You are actually fusing a lot of data, right? A lot of, variables, right, into that entire equation of understanding the possibility of consumer behavior, right, in terms of the payout of the company, right? Tell us a little more about it, right? And going forward, how do you see it play out?
Sure. So I think this was alluded to in the previous panel as well. And while I do not speak about the agri side, we speak more about the emerging D2C packaged food, food FMCG segment. Our own belief has been that there are multiple factors at play which are now evolving as well. One is definitely COVID that Nikhil was speaking about. What would have taken 3 to 4 years has gotten compressed in 3 to 4 quarters. Second, as some of the panelists mentioned, there is a greater adoption of digitization and digital data sets getting created by that across the board in itself. What revenue-based financing does is it is built on 2 or 3 predicates in itself. The first is most fundamental one is that revenue fluctuates.
Right.
And it is common for pretty much all of the businesses. There is a fair bit of seasonality in a lot of businesses in itself, and RBF, revenue-based financing, sort of incorporates that. The second, the availability of newer data sets to be able to assess this. And last but not the least, something that was alluded to in the last panel, sitting in the revenue flow itself to be able to de-risk the business model. So what Hemendra said, reducing the cost of capital is absolutely imperative. If at all, it's not just for the farmer side, it is there for every single segment in itself. The cost of capital is incredibly high, and one has to think about it slightly differently if one has to make it happen. RBF is one such model that allows it to be sort of thought of with a fresh lens in itself.
Right. Very interesting. It becomes important, right? I mean, India is a fairly complicated market, right? When it comes to our consumption patterns, right? Be it agriculture and like we discussed, right? I think this is something that we've been discussing since morning, right? That it's now become so much more critical to fuse consumer side expectations with production side possibilities, right? It is just so much more important, right? Shiva, I want to essentially come to you, right, on this particular point, right? What are some of those? What are some of those opportunities that you think are gonna how are they going to shape up in the process, right, as we go along, that you think are going to really enable this entire piece to come together, right, and perform far more efficiently, right? Right. What's your sense of that?
So I think, Ashu, if we look at the value chain and what's been done, I think there's some areas that we haven't really done as much work. And I think transparency on what you're actually seeing as market trends and market prices, behaviors at local mandis, etc., saying this is where value of goods that are relatively more commoditized, where you can see opportunities to have other players and really coming in and stepping in of saying, I can fulfill contracts which are actually up to X value, getting now what we have seen with the new regulations that are coming through, of getting farmers to be able to enter forward contracts of saying, as long as you follow certain business processes, there'll be an offtake that can come through. So I think the opportunity is there for especially the agri-tech companies that have established themselves to say, now we want to actually start working with the farmers in new innovative structures that have come through, because it's not just in the last 18 months that COVID is hit. I think you've seen a new regulatory framework allow you to behave very differently in how you're interacting with farmer communities. And independent of the politics of the policy decision, I think it's allowing a new framework of how you can behave that actually can see a drastic rewrite of how we are engaging with these communities. So I think that's an interesting one. I think the other one is about getting intelligence over to the farm, and whether it is you as an agri input company that is engaging with startups and engaging with farmers of saying, here's how something you're already doing, here's how I can actually get you to improve yield. I am someone you trust because there's actually a commercial arrangement where you pay me on a frequent basis, or being the agri output company that's procuring. There are ways that you can actually now start to integrate, because this infrastructure has really been set up, and the ability to have a much stronger relationship with the farmer also exists. So I think as we look at those two being Philips, we'd be really interested in seeing models that have deep integration on saying, now we actually work with the farmer in a much more dynamic way than was previously possible, leveraging new regulations, new tech, new consumer behavior, including from the farmers who are more open to working on technology solutions as well. So I think if you can leverage what these are as trends that have really been triggered and accelerated in the last 18 months, with everyone being more flexible to how tools are established, saying you've proven it in a geography and then looking to scale up can be really attractive for not just us, but any, I think, agri-tech VC to look to come in.
Interesting. Nikhil, I want to come to you, right? And I would love to talk to you a little about influence, right? And I'm coming to Ranjan and Anurag as well, right? Now, influence is something which is, what has essentially happened is, especially in the consumer ecosystem, right? Is that, we are today, the arbitrage that existed between markets, right, has kind of gone down, right? Aspirationally, we are peaking right now, right? Our demographics are supporting our aspirations to go out and consume, right? Now, what is happening in an element like that is that not a lot of companies and organizations had a certain life cycle, right? Products had a certain life cycle. We might not necessarily be in the same zone, right? Product life cycles could shorten even further. Nikhil, what I would understand is, right, in an environment like that, right, how do you evaluate a business, right? Because it's a fairly complicated environment that we're sort of heading into, right? What do you make out of a situation of that sort, right? Given you are taking exposure into, D2C brands, right? What's your sense of this? You're on a mute. You're on a mute.
So Ashu, this is true not just for agricultural investments or agri-based businesses that you look at, but across the board. I think the bigger thought is that consumers have moved, legacy consumer companies have not. That's the disruption that you're looking at, and that's the disruption that as an investor you want to invest in, because you fundamentally want to always invest in leadership of tomorrow. And if it's leaders of tomorrow, they're getting born today, and thereby they'll be in the early stage and so on. So I think that layer is quite clear. Now, the idea is that, how do we capitalize on that, and how do we also fund businesses which will become the next big disruptors in categories like agriculture, which is where our thought process is right now. I think one is clearly the fact is that the need of the consumer has changed or is evolving far more rapidly than what we've seen in the last few decades in India. So firstly, if someone really cracked a D2C solution to become the one-stop solution provider to consumer needs, I think that could be one layer to look at. Second is the inherency of this is that there has to be a very strong digitization of farming, where farmers would potentially have a one-stop shop app also for all their agricultural requirement. Could be financing, microfinance, information, I don't know, insurance, and so on. Third is that if you had some sort of analytics on top of it, which talked about bringing across all the structured and unstructured data and across the supply chain to fundamentally take care of some of the problems of efficiencies and so on. I think that would be interesting to look at. Financing, last mile logistics, and so on. I think pretty much across that chain. So my sense is that while today we look at all these broken aspects in a silo, and like I've always said that I think people do address those silos very, very well. And I think at some stage this will all become fungible, and you will see some player evolve to aggregate all these needs of the farmer. I don't see that being too far away. Maybe in the next 3 to 4 years, you will see some relevant player emerge who possibly addressing the larger pain points of the agricultural ecosystem. And like in every business in India, and so true in the world, there's always these 2 or 3 guys in a particular space which get disproportionately funded. Not because of what the business does today. The business possibly does not merit that value, but it is about what that business can do for the next 10, 20 years. You've seen that happen in the wallet space. Paytm did get disproportionately funded, not because of what it did yesterday, but what it potentially would mean in the next 10 years. Or Ola and Uber and all the other guys that we look at. I think a similar instance will happen in agriculture, where possibly you might see maybe a couple of $1 billion getting funded in to 1 or 2 players, and that will create the category play.
I think that's going to be that's going to be scary. That's going to be scary if that happens, right? I mean, agriculture, you don't want that to happen, right? But no, I think Nikhil, I want to pick your mind on pick your brains on the institutionalization of consumption, right? I think that's very, very critical. I mean, given that D2C is a beautiful manifestation of what happens in the farm, right, and how it comes to you, right, and each one of us. And I think the kind of demographic that we have currently and what we are kind of shaping up as a society, right, we're going to be essentially consuming a lot of that, right. I want to understand I want to understand how do you look at that as an opportunity? I mean, how do you deconstruct that as an opportunity? I mean, we've spoken about agriculture at large, right, but I want to specifically understand how you look at D2C as an opportunity, right, because that's going to be huge, right. we're getting into a very different kind of a family setup.
Oh, completely, Ashok. Think of this. If you look at the last 50 years in India and look at the broader consumption business as a whole, you've actually seen nothing change in this country for the last 5 decades. Yeah, the same players who were relevant in 1980s are still the most relevant and dominant names today. And that's not, so there are 15 companies which control almost 70% of consumer wallet share. In 1980s, there are 15 companies even today which control 65% of consumer wallet share. Which fundamentally means there's been no new player large enough disruptor in consumer domain for the last 5 decades. And it's not because the brands were so super powerful. It's just because distribution was a bigger moat which created these brands. And my sense is that over the next decade, you'll see democratization of distribution happen, right? It could be regional, third party, e-com, digital, and so on. And that will create its own new players, challengers, disruptors who will fundamentally nibble into market leaders or become a market leader. I see that happening in an extremely strong manner. D2C is one layer of that happening. You're just seeing the very early stage of that changeover happen. Nowhere in the world do you see two companies or duopolized networks controlling 80-85% category share, which is the case in India. Two companies control 80-85% category share in almost every category that you look at. I think that will get broken up significantly. There is no reason for two companies to control 85% category share in a country like India. Their category share should not exceed more than 40-50%. So I think that changeover will happen, and that will lead to not many players, challengers, who will fundamentally potentially disrupt existing players.
Interesting.
And D2C is one medium of creating that, because it creates a level playing field for someone to outshout a leader, which was not the case in an offline network, which you couldn't do it.
No, and I think there's just so much more intelligence, right, that these brands now have, right? Traditional brands were not essentially designed to sort of understand the consumer at the level that they did, right? It was always secondary research that they did, right? Or second-hand research, let me put it this way, which they did, right? And there was a post-event research that they did, right, to understand and comprehend a consumer. I think we're talking about a very different ecosystem, and I think D2C is going to be a fairly large representation to that.
I'm going to make a point if I can. Please. Sorry. Just to give you that reference, Unilever, which is by far the finest Indian consumer company, controls almost 18% of consumer wallet offline. They control less than 6% of consumer wallet in a digital world. So clearly these two layers don't talk to each other. That's a big disparity that one's looking at.
Absolutely. And I think there is a new credibility which is getting established, right? Ranjan, before I come to you, I want to go to Anurag, right? Because Anurag, you are actually enabling a lot of them, a lot of these brands, right? You are coming in much earlier than, even a larger fund would, for example, right? How do you view this as the institutionalization of consumption which is happening, right? I mean, something that Nikhil alluded to, right? It's becoming very, very interesting. I mean, we've spoken about it across other occasions, right? But I'd love to hear from you, given that we have so many people who are listening to us participating, right? I'd love to hear from you, right? How do you see this the entire paradigm play out?
Sure. So I think referencing first to what Nikhil was saying as well, we think there are two reasons why this has happened. It's not just distribution as a moat. We fundamentally believe that capital had also become a moat, which is why you would not see a lot of breakout happen. Of course, multiple other sub-factors that were at play as well. Our own belief is that now with post-COVID, which is just more digital adoption coming into play, there's more of a level playing field getting created. There's no reason why newer entrants cannot reach out to an end customer, get distribution, and more importantly, get good product and good capital backing them as well. So fundamentally, we see that this is that breakout zone that should happen over the next 4 or 5 years, where more and more brands get created in the consumer space, each one going after micro niche customer segments. And as long as there is customer affinity for that particular brand, we definitely see that there is a lot more happening. Traditional capital per se, on the equity side, would always try and find the best, the largest, potentially for exit. Traditional debt, unfortunately, could never incorporate the seasonality of revenue into its fundamental business models. This is where we see that there is a lot of disruption waiting to happen, and it is actually going to happen. The number of phenomenal local brands getting created, digital first brands getting created in the market is it's phenomenal. All they need is acceleration of capital, good product quality, and distribution, multi-channel distribution that they will build over a period of time to accelerate more and more. So I think we're just at the cusp of seeing some phenomenal innovation in the consumer ecosystem.
You know, my personal number is about 100,000 brands come up in the next 15 to 18 months, right? And that's absolutely possible. I think people are, you know, kind of realizing this, and you know, this is becoming a creative zone for many people, right? In that sense, and so I completely concur with what you're saying, Anurag, right? We're going to have many brands, right? Eventually, how many of them make the cut, right? Becomes the Unilevers, right? And we have house of brands as a concept, which is now kind of coming in, right? We're going to possibly some of those trends, right? But you know, you mentioned of, you know, the requirement of capital. I think we're in a beautiful and a brilliant liquidity environment, right? Rajan, I'm going to come to you. What do you make out of this environment that we're in, right? You know, I think you know, it couldn't have been sweeter, right? Nikhil, I'm going to come to you in just a bit on this particular question, right? It couldn't have been sweeter. I mean, everybody is you know, kind of valuations that we've seen, the kind of inflow that we've seen, injection of capital that we've seen, right? I think no founder could have asked for a better scenario, right? I think the party is going on.
Perfect. You said it. The party is on, and despite Federal Reserve's warnings, the party continues. So my two bit on this is as follows: that I think a lot of hard questions are not being asked, be it B2B, D2C, or anywhere.
Right.
In a tight environment, which is likely coming over anybody's guess, 6 months to next 18 months,
right.
Going to be difficult for a lot of startups, right? So there, I think startups need to be mindful of their burn, their per unit economics, most importantly, in order to survive. I mean, it's a bump or a speed breaker, but I'm sure that the party would continue beyond that as well.
Right.
And you know, at this point in time, I think these are go-go years. So venture capital, PE money, a lot of there is a sort of pyramiding which is happening. In the sense, specialists like us come in, then generalists pile up on top of that, then venture tech comes in, and it goes on. And like now, Anurag with his revenue-based financing, right? So it's a pyramid being created. Now we have seen this before. I have personally seen this in 2000, 2007. Nikhil has seen it many times. So I'm saying one needs to be very careful. So venture capital investing in this environment is very tough. Valuations have gone through the roof. Today morning, I met a company I won't name in the segment. A revenue of 5 crore asking for post money of 250 to 300. I mean, how do you make money from here? Right. That's the question, right? 5 crore per annum. It's not even monthly.
Right.
So my sense is that a lot of guys will get burnt. A lot of new funds will, with you know, not so mature investment teams will get burnt. There is pain awaiting going forward. So, in fact, we have been pleasantly surprised by the performance of our portfolio. We are sitting on, not able to disclose, but our IRR on our portfolio is north of 300% at this point in time, all in just 1 year.
Right. You must be happy soul, and I'm sure you're happy.
I'm a little worried. If you ask me, I'm a little worried.
Right.
Because then it sets a. I come from a hedge fund environment, wherein it sets a high watermark.
Right.
So you can't repeat this performance for a long time to come.
I understand.
Last I did that Q was 70% IRR. In 2 years, we got an exit. We're very happy. But this is completely, I would say, the best performance of my career so far. But I'm not very happy because it is going to be extremely difficult to repeat this kind of performance over the next 2 years, 1 year even. And from here on, only the trained minds and the experienced eyes like Nikhil will outperform.
So let's pass this on to Nikhil. Nikhil, what do you make out of this, right?
Firstly, I can't really advise Ranjan, but I can just tell him just enjoy what you're doing right now. No, but on a serious note, I think I have a bit of a different view on this. Obviously, in every business environment, whether it's a peak of a market or trough of the market, you have to be selective in what your choices are and stuff. So that is a uniformity that I'm sure every investor will have to deploy that capability. But I think what has also changed quite significantly, and sometimes you have to also change your lens when you look at different environment that is also around you. Is that firstly, there are maybe 2 or 3 points that I would make. firstly, I think there is always this leadership baggage or leadership curse, which is also there with leaders, which becomes a disincentive for them to disrupt their own businesses, because it means that you have to give up something that you control today to the obvious risk of losing completely tomorrow. And my fear or my belief is that leaders cannot disrupt themselves. So that's the big challenge which will happen. And when leaders don't disrupt, there's a space for innovators or disruptors to become the next wave of leaders. So that I think is a big momentum as you look forward. Second is a very big belief again is that I don't think incrementally consumer entrepreneurship in generic, consumer entrepreneurship more specifically, there's any mortal fear of taking on leaders anymore. Earlier, and I can say this with some conviction, I remember when in '94, when Dadi Seth was there in Unilever, and he made an announcement saying that we'll get into oral care. Colgate would just drop off because there was a mortal fear of someone taking on Unilever. That mortal fear of taking on leaders no longer exists anymore.
I agree.
I remember 10, 15 years back, Capital was a big institutional player in India. As an investment guy, I would, you'd love to have Capital on board as a broking guys and so on. No one cares about Capital anymore. There are maybe 20 other Capitals in the world, right? Or 50 other Capitals in the world. So no one really cares about them. So, and I'm just being a bit dramatist about this. I just think that leadership, fear of leaders is no longer there. Mortal fear is out. Third is, Anurag did mention that financing has become another moat and not just distribution. I think distribution dismantling has created financing as an alternate mode. You could not have financed someone 10 years back if you were trying to compete with, let's say, Colgate in oral care. Because Colgate controls 60% of oral care shelf space. So they would get knocked off the shelf because there's just no choice of anyone funding someone against Colgate. I think distribution layer opening up has enabled that financing to also come in. And lastly, I think it's also about the fact that where India is at that journey, which is saying that brand loyalty is at an all-time low, brand awareness is at an all-time high, which is a great foundation for disruption to happen and for a lot of our disruptors to evolve and become relevant. So, you will bet, I'm sure we will all get surprised quite disproportionately to the level of potential disruptive leaders who will evolve in the next decade. And maybe we'll reflect back a decade later and figure out that maybe we possibly could have participated in a lot more of them. I'm not being suggestive, and I completely understand what Ranjan is coming from.
I think what you're possibly sort of referring to, Nikhil, is something. It's a beautiful future, and I think that's essentially what you talk about, right? I think Ranjan essentially what he highlighted in the process, right, is that the contraction that could happen because of the global cues, right, could just mean a very difficult phase for many businesses. I think that's essentially what he meant, right? But I think you put the narrative in a completely different context, right? And I think you're absolutely right. I think with the kind of complexity that we have, right, as a country, you have to think long term, right? These are small aberrations, right? The way I look at it, right? But I would want to go to Anurag, right? Before I, get to my last question to each of you, Anurag, what do you make of it, right? I mean, you're essentially into revenue-based financing, right? Availability of capital is, of course, there are global indicators which are not necessarily very clear, but also not very positive, right? What do you make out of this, right? Do you see a contraction which is going to happen in the process, which could possibly mean a little more risk on brands? How do you construe the situation that we're in? And this is not a question that is a happy question, right? And not that I want to discuss about it, but it's an important question, right? Because that sensibility needs to step in and and needs to take it.
We feel whenever there is a confusion on narrative is when it leads to more issues than anything else. And currently there is an ongoing narrative where all of a sudden D2C has been glorified.
Right.
D2C existed before COVID as well.
Right.
Nothing has changed. In fact, if anything, India tends to become multi-channel far faster and omni-channel far faster than most other markets as well. But we think whenever prudence is lost is when things go off. To what Nikhil was saying, again, leaders have to be leaders, and then there is a certain way that you have to act and react, forcing growth. But if one looked at the space and the sector, fundamentally, it operated always in a phenomenal way where margins were respected, and that was the way that the businesses were built in itself. It's only now that loss-making business models are glorified And that is a very dangerous narrative, according to us.
Right.
Nothing other than that is changing distribution, capital, brand awareness, affinity, lowering of loyalty. All of those points hold true. But at the same point in time, we feel wherever that prudence is lost, and there is a reason that it is being pushed at this point in time in a few models. That's where we worry. That's where we have a hawk-eyed look on the data. Other than that, we absolutely see no reason why the numbers that you were speaking about, 100,000 getting created, or the top 15 brands of India getting disrupted by more and more getting inputted in the ecosystem come over. But there will be some casualties along the way. We've seen this time again, wherever growth becomes a foolhardy recipe for messing around with business model structures. I think that's where we worry a little bit more.
Interesting. Nikhil was wanted to make a point.
So I just want to make it a bit controversial. That's it. But no. But I just think so. Anurag, you did talk about the fact that profitability is being thrown out. But I would just believe, and again, these are all beliefs which have kept changing over a period of time. I think there are three ways of creating value or creating great impact, or creating value rather. One is if you have great scale, which is revenues and so on. Second is if you have great profitability, which is what most consumer companies seem to have, right? They are at 70-80% ROI in the businesses and so on. They keep, and despite the fact the cost of capital is at 6%, doesn't matter to them, 70% ROI. And third is when you create great impact. I think the layer which we are possibly missing out today is saying that because there is not too much of profitability today, I'm willing to ignore impact. I don't think that would really go hand in hand. I think either of the three layers is great enough to create value, because eventually it's a fact also that in India, it's very, very difficult to believe that a consumer behavior pattern has changed completely and you will not make money. We are seeing it in a very micro landscape, I think. Businesses do take time. While business life cycles are shrinking, but businesses do take time to create great impact and then create great value, and thereby create great profitability also at some stage. I would want to believe that, if 500,000 consumers or 1 million consumers move to a different form of consumption and you've changed that habit, there is no chance that you'll lose money at that level. Why are we okay right now to say that Amazon is fine with us even if they lose money? That's okay for us. But we are not okay if let's say Ola loses money. I would feel slightly not as connected with that. I think it's a fair proposition that tomorrow, if Ola shuts down shop, we will get concerned. I agree. If Paytm shuts down shop, we'll be okay. I guess so. But Ola shuts down, we're not okay. Policy Bazaar shuts down, we're not okay. Nykaa shuts down, we're not okay. So I think there are businesses which are genuinely getting created, which are creating great moats for themselves. And I would feel pretty okay with the fact how they've been able to build up a consumer behavior, change the consumer behavior, and thereby then create great stickiness to what their businesses are supposed to be doing. So
no, I think I'll sort of quickly interject right towards the last question, right? But I think Nikhil, Anurag as a founder would definitely agree to what you're saying, right? I don't think there's going to be a disconnect, right? I think the value system is essentially the same, right? I think what he essentially meant, and possibly where he was coming from, is the way he's financing certain businesses, right? I think that's distinctly different from how you would possibly look at it. I think for him to be cued on to what's happening within that fortnight is very, very important, right? For him to assess the risk which possibly he's going to be his portfolio could have potentially, right? And I think that's essentially where it is, right? But gentlemen, last question, right? To I think each one of you, right? Because you're in that financing game in your own ways, right? Ranjan, I'm going to come to you, right? What are the next opportunities that you're looking at, right? In D2C and Agri at large, right? Given your spectrum is a little larger, I'd love to understand that, right? For example, how is insurance looking, right? How are those things looking to you?
So since the discussion veered towards D2C a bit, just touching upon that in terms of where we see the opportunity in that going forward. We are seeing opportunities in, obviously, we have done online seafood and meat, but done online F&B along with Nikhil. We are looking at probably milk and egg opportunities, D2C again, with or without omni-channel capabilities, certainly. And we are looking at agri-biotech, an overlooked area in Indian agri ecosystem. We are totally looking at biotech opportunities. We are looking at infusing fintech within our portfolio companies. Apart from Jai Kisan, which is a category leading firm in agri fintech, there is a lot of scope for embedded fintech. So we are infusing fintech capabilities in Unnati. Amit was there in the previous panel. We are looking at D2C in rural areas. So absolutely, Nikhil made a great point. 15 companies dominate the landscape. They are really feeling the heat, and rural is the next battleground.
Right.
So there, in terms of, we'll be announcing a deal soon on that space, wherein distribution, own brand capabilities in rural area. Absolutely.
Interesting.
And there also the biggies are lining up to provide cash or take a stake in there.
Right.
So we are slightly more different, as compared to. So we have to look at rural opportunities, agri opportunities. We are a specialist player. We are looking at climate change as an opportunity. That's where seed varieties, say low water consuming seeds, saline water resistant varieties. We are looking at marketplaces. We have looked at alternative protein space also, but the valuations were not very convincing. So a lot of spaces we like, but in fact, we like some of the core agri offerings, robotics, smart irrigation, quality assessment, but valuation somehow we have not been able to.
Ranjan, I have a bunch of questions, right? But I'm going to reserve those questions for our next conversation, right? Which we're going to have a one-on-one setting, right? Nikhil, I'm going to come to you very quickly. What are some of those areas that you are excited about, right? You are kind of looking at. I think a Q will be very helpful.
Yeah, but frankly, Ashu, whatever we're interested in, we pretty much put in the money very soon. So it's not something that should be. But yeah, I think clearly, like I said, this is a space which has possibly the highest level of fragmentation, highest level of unbrandedness in some form, highest level of regionalization in all forms. So it's got all the attributes to get consolidated, branded, and so on. So I think it's a space which is interesting. We've obviously done a few investments already, and we'll continue to look at different spaces at different points. But we've done plant-based alternate meat as a category. I think that could become very large as a lot of consumer consciousness comes in about not killing to eat in some form. So maybe that's one layer to look at. We're very, very bullish on platform plays in agriculture as a category. Agriculture or consumers as a category, I would say. Platform plays are not necessarily just a brand. So there could be distribution changeovers, which is again very, very critical, and I think that's pretty much almost as pregnant as it can be. Because the fact is that even if you look at India, and there are 7 to 8 million retail distribution points, less than 2 million retail distribution points is actually addressed directly by the largest players. So the balance is pretty much wholesale led and so on. So I think there's a lot of meat which is there in that part of the business also, and maybe that could be interesting to look at. And D2C. Logistics, everything, I think pretty much a part of that. So yeah, we'll keep looking at opportunities as and when they really look right for us.
Super. Not giving a lot away, right? Thank you so much, Nikhil, on that one. Anurag, I know you're essentially focused on D2C as a category, right? But I'd love to understand, right? Some of those areas that you think are kind of emerging are going to possibly a larger play in your portfolio.
Yeah, so we don't think of it at all as emerging categories. I'm going to say it how we think about it, which is as long as there is revenue.
Right.
As long as there is a predictability of revenue that we can impute,
right.
We're in the business of finding and assessing risk,
right.
and expecting a certain return commensurate to that risk. So it's a different way of financing, of providing capital. So for us, all the sectors that have been mentioned are great as long as there is revenue, and if there is no revenue, it's not great for us. So that's how we think about our world.
Gentlemen, thank you so much for taking the time out. How I want this conversation to go on, right? My team is going to reach out to you, each one of you individually. Anurag, we've done that session with you already. But Ranjan, with you, Nikhil, with you, we'd love to do longer sessions, right? I think there is just so much of intelligence which is there, right? So much of observational, critical, important points, right? That would be so much more relevant for founders, right? We'd love to do individual sessions with you. My team is going to reach out to you. Thank you so much, each one of you, for taking the time out and being with us. It was lovely having you. Thank you very much.
Thank you for having us over. Thank you, everyone.
Thanks, Ranjan. Thanks, Anurag.
Thank you, Nikhil.
Thank you.
Thank you, dear panelists, for spending your valuable time with Asia Tech Journal at India Agri Innovation Futures. With that discussion, we come to the end of this day, and the last panel for the day. I would love to introduce you, Improving Output Agriculture Innovation for Global Markets. Let me take the privilege of introducing you the panelists. Ayush Nigam, co-founder and head strategy, PureScan AI. Rajesh Ranjan, founder of Krishify. Ms. Kavita Shairam, founder and CEO, Hipsol Life Technologies. Mr. Prateep Basu, co-founder and CEO, Satshare. Dr. Vaibhav Tidke, co-founder and CEO, S4S Technologies. Mr. Manoj Rupa, founder and CEO, Natura Corp. Mr. Manoj Maurya, co-founder, Delmos Research. Mr. Rohit Sharda, director and co-founder, Silage Agro. I welcome you panelists, and this session will be co-moderated by Jagadish Sunkat, co-founder of Agri Futures, and Ashu Agrawal, India lead Asia Tech Germany. Over to you, Jagadish and Ashu. Thank you.
Thank you so much, everyone, for being here and being patient. It's great to be a part of this panel. Welcome, everyone. I want to begin with one round of quick introductions. Firstly, may I ask Ayush to please introduce yourself? Generally, I want to ask, besides about yourself, each of you please just tell me your journey from the reality and romance of agri-tech. Okay, the reality you experience, the romance you experience. Ayush, could you begin, please?
Sure. Thanks, Jagdish. So as a quick background, so I did my BTech in mechanical engineering from IIT Madras. But more importantly, I was always passionate about creating a larger change. And that passion is essentially what drove me into these agri-tech startups and all. So essentially set up Distinct Horizon first. So that's the first startup. Later set up this other startup, PureScan AI. So right now I'm running these two startups. We obviously have two teams running on that. In terms of the struggles, I think, Jagdish, very importantly, because it's not been easy from day one, especially starting with Distinct Horizon, running into the agri machinery space. First of all, was a very difficult thing for multiple reasons. Number one, raising capital was very tough. Number two, once you develop your product, even kind of making sure that the farmer adoption happens is a huge challenge when we look at agri machinery adoption. And I think that there's a huge challenge there. I think others in this industry of agri mechanization would agree to this. This buyer selling new machines to farmers is like a massive concern. Of course, government does help in certain ways, but I think that's something to really look on, how to get such things adopted. The other thing, so in terms of PureScan AI, so we kind of have been working on developing these rapid food testing devices. So these are spectroscopic AI-based devices that help you detect toxins, chemicals, etc. We started with a toxin called aflatoxin, which seemed very fancy, which seemed very important because there is huge cancer concerns, etc. with such things in our food. Especially in Africa, these concerns are big. But I think, again, like there are challenges in terms of adoption. However, there are few players, exporters, especially Africa market particularly, which has been more warmer to us compared to the India market. So I think there are differences, but I think the agri market is definitely needs a lot more maturing. New innovations are coming out, but I think there's lot challenging stuff yet to come in front of us. So I'll probably carry on a little later.
Thank you, Ayush. See, being with you guys make it special for me simply because you guys are the people who have been on the battlefield. You are the infantry. You are the people who are the actual players in the game. Everybody else is, passing comments on the side, in the ring, etc. Okay. So, Rajesh Ranjan, a few words from you, please.
Hi, Jagdish. Thank you. I am from Krishify, and at Krishify, we took this, I would say, audacious challenge of building a social network for farmers only, for Indian farmers, right? And then the idea was to marry this social network with their transactional and commerce needs. So one tough problem, and then on top of that another tough problem. So far, the network piece has been moving really well. right? And marrying this with their transactional needs, we have seen some great initial signs of happening it, right? So I mean, the last 2 years we have acquired more than 5 million farmers with very less amount of money that we have spent on marketing, right? Surprisingly, for many of the farmers, Krishify is like fourth or fifth app on their device that they extensively use after Facebook, WhatsApp, and YouTube. So one realization that we had, that, you know, a lot of people, they say that, you know, there are many companies coming from India and building for Bharat, right? But if you see this Bharat audience, most extensively, the three apps that they use are global products, right? So I believe that this is kind of a misconception, that building for Bharat is different from building a global product, right? So ultimately you have to match that standard, and that is what something which has worked for us, right? And now we are seeing the kind of use cases coming in, and we are learning from them only, right? So initially we just started like a simple content platform, and we saw people selling tractors, selling their own homegrown seeds, right? We saw them you know, selling organic manures, vermicompost, cattle, right? So we are learning from them and building features whatever, you know, they ask for. So that's how it has been going.
Thank you so much. Kavita, a few words from you. The romance you have had with agriculture, the realities you have taken on.
So good afternoon, everybody. Thanks for giving me this opportunity. Most of the panelists here, we know each other. We've been traveling together. I have a post-graduation in medical biochemistry from JIPMA. Very surprising, right? And then I did my PhD in IIT Madras, biochemistry and molecular signal transduction. And most of my work, both in the medical field as well as in the biotechnology field, was on stress biology. That is where my attraction towards agriculture also grew, because the idea was, if organic farming has to be possible, I thought it has to do something with the stabilization of the bacteria that we are going to provide to the soil. So that is where I thought we could bring in my expertise into this field and try to solve the issue of using less chemicals. I mean, try to solve the issue of indiscriminate use of chemicals and use of more biologicals. So that is where my journey started. And when I started, it was like I had my co-founder, Dr. Anant Raheja. So both of us aimed to stabilize these soil microbes in nanofiber technology. So the technology actually offered 5 grams of water-soluble membrane, which can fertilize an acre of land. So this was something like a mythology coming true, because the product actually looks like a handkerchief, and all the farmer has to do is just dissolve it in water. But what we also understood is selling this product, like we thought the commercialization became a challenge. Though we were able to raise funds for scaling up the technology, proving the technology, piloting, the commercialization was a challenge for us because of various reasons, because we were more oriented technologically, and we didn't know how to position our product in the market. So such issues started popping up. And we also understood that the farmer who's used to bulky materials, applying bulky materials, for him, convincing him that 5 grams of something like a lightweight tissue paper will actually do the job. So that also was a challenge, and we understood that. So currently we have slowly pivoted towards another product, I mean the gel form of the product, which is much easier to convince, and to actually the aim is to make them do more of organic, right? So we started working towards it rather than concentrating only on the technical part of it. So that is how currently we are positioned, and we are able to at least make an entry. So that is where we are.
Thank you so much. I really appreciate deeply how much of your dimensions you have been exploring, from the various sciences you have pursued to this whole journey of entrepreneurship. I'm sure we have a lot to exchange and note about that. A few words from Pradeep Basu, please.
Jagdish, Pradeep is unfortunately not with us. He had to leave because of a certain emergency. So you can move on from there.
Yeah. Vaibhav is around? Dr.
Yes.
Vaibhav,
yeah. Thanks, Jagdish. My name is Vaibhav. I'm a chemical engineer by professional education, and then did PhD in food processing domain from Institute of Chemical Technology, Mumbai. And during university, only in the lab, we started with the whole food processing angle within university, and then we realized that it can be a technology that can be taken to the market, and that's how we started our journey. So currently at Esporis Technologies, we're an end-to-end food processing platform. We work with farmers and women entrepreneurs to do a procurement at a village gate, and then in the same villages we have created food processing units which convert these agri produce into processed food, and then finally we supply these food ingredients to range of large and small food companies and hotel restaurant caterers. That's a business that we're into. The opportunity is large, untapped, around to $40 billion of Indian food ingredients market that we're tapping into, and roughly around 20,000 farmers that we're currently sourcing from. So that's the space we're into. In terms of products, we're into horticulture products like onion, tomato, and potato processed forms, and also into the grains, like we're having pilots around starches and alternate protein that can be extracted from soybean and pea. So, but the key focus is how we can source more efficiently from rural farmers and do a processing at a farm gate, so that we can cut down on logistic and middleman cost. So that's the overall market that we are presenting. Thanks a lot.
Thank you, Manoj. Yeah, thank you, Vaibhav. Sorry, Manoj. A few words. He's a good friend from Bangalore. What's been your realities and romance in this space? You two moved away from academical institutions into entrepreneurial journey.
Yeah. Yes, actually, first, thank you for giving this opportunity. And so actually, I was working at Indian Institute of Horticulture Research as a research associate in the beginning with a background of MS by research from Jawaharlal Nehru Technological University. And my core research was on the formulation development for climate resilient agriculture, that is mainly in sustainable ways of controlling the pests and diseases. And I was mainly concentrating on the crop protection in the polyhouse segment, which is a very big segment in Karnataka. So, and we have seen that there is a lot of scope for the agriculture because of the climate change. Like in the beginning, there was, means when I have joined my career at Indian Institute of Horticulture Research, the field which I have joined was the least considered, that is nematology. And now that has got a tremendous scope because of the climate change. The disease infestations have been very high, and the losses have grown in multiples, and that has gained a lot of traction. So with that background and with the experience that I have gained at Indian Institute of Horticulture Research and the institutes that we are associated with, we have mainly concentrated on the climate resilient kind of formulations, and also we have targeted crop specific, starting from seed sowing till the post-harvest technology. And we have developed crop-specific packages with our products. And because farmer always needs a complete package of practice where for shifting from chemical to non-chemical, and at least to have an integrated package, right? So that is where we have concentrated, because initially we understood that farmers have a lot of issues that not able to means not available for products for different stages. So we have worked on different stages, stage-wise and crop-wise schedules, and customizing the formulations as and when required. Like for coffee, we have a different kind of package and formulations, and the same thing, and a different package for sugarcane in UP. So that's how we are working.
Great, Manoj. Rohit Sarda, you've been working in another core feature of Indian agriculture, the cattle. Okay, the milch animals, they're an integral part of the families. A few words about yourself, please.
Right, Jagdish. So I think you put it across beautifully. This romance with agriculture is like 5 years old for me. And, it's like having another girlfriend in a way. So you still get those sleepless nights. And this is like a 5-year-old journey for me. Before this, I was into investment banking, working in real estate and consumer product space. Spent about a good 7 years analyzing businesses at that point. And the love affair with the silage and agriculture kind of started in 2015 when 4 of my batchmates from engineering, came together. We saw a huge gap in the animal husbandry space, the dairy space, which is a key for the Indian market. Majority protein requirement comes in from milk, and India is the largest milk producer. But on animal nutrition side, there was a big void. When it comes to basic forages, there was almost like a 60 to 70% deficit. And this is a high impact segment wherein we are impacting on a daily basis an agriculture farmer, dairy farmer, the milking animals, the cows, and the consumer who's having the milk, along with the environmental impact, wherein, when we are into manufacturing of silage, which is a very basic product, it leaves zero residue. The harvesting is all mechanized. And, from the first day when we spoke about this idea to people, they were like, tum chara bechoge. To now, this is a very flourishing industry in terms of cattle feed. So it's been a very exciting journey. The love affair still continues. Hopefully it will continue. My wife keeps on telling me that she's probably become second priority because of this, but she's still first priority, and it goes hand in hand. So thank you.
Yeah, that's the beauty of being with you guys. You're the people in the action. I really am not coming up with another phrase for today. Thank you guys for really stepping out of your comfort domains of academics and wherever you were to this extremely challenging journey of entrepreneurship where you're dealing. A common thing that many startups, when they speak to me in this domain, really ask about is really how do you gain trust of farmers? I really wanted to listen to some of you. Can I begin with Kavita? How was it for you to gain trust of farmers?
So they believe only what they see, right? So trials are the only way, at least in our case where it is agri and food. I think Mr. Manoj would also accept that, because in most of the cases, farmers, they've been using a lot of products, and whatever has been claimed, they really don't see the effect, especially in the organic segment, because there are a lot of products there, and whatever recommendations are given, they do apply it, but still they don't see the benefit. So that way you have to start with the demo. That is what they request us to do. And we keep doing that, though it's a long journey and a very tiring journey, because every zone you go to, it'll be like starting from the first. Though you have results, you feel that, okay, I've done it with the universities, I've done it in other similar regions, I've done it in other crops, similar type of crop, similar type of soil. So I think most of you must be aware, India has 40 geoclimatic conditions, and not to say the states and the varieties of crops and soils we have. So, but each person would come up and say, each farmer would come up and say, can I see a demo in my own village? So that's how you can gain the trust. I think there is no other shortcut here. And mostly they go by their own progressive farmers, whichever farmer they have in that zone, or the leaders, especially the farmers who are the leaders. So though there are dealers, there are other network, the more they trust only their own people, especially those who are model farmers in their own region. So currently I have identified that is the only way to move forward, though we have tried various other things, but this is the most important route to gain their trust.
Thank you. Thank you. Have you had any chance to explore many of the modern social media tools, etc., with the rural folks?
Yeah.
What's been your experience?
Yeah, social media tools, if you see WhatsApp, we've been trying to WhatsApp, we've been trying to conduct webinars on WhatsApp, reaching out to the farmer producing organizations, because these farmer producing organizations, mostly they have their own WhatsApp group, they have their own network. Some of them even have their Facebook groups. So we've been trying to do that. And it has been good. That creates an awareness. Of course, it definitely creates an awareness that there's a product, they would have heard the name, and their fellow farmers are there, so they would actually exchange what results we got. So some conversation would be happening on the ground. But whatever you try, one time seeing the field is something different for them. That gives them more happiness, and that gives them more confidence in using the product. Of course, the social media gives a lot of awareness, and that first level of introduction is actually taken care of. And we've been trying to do that, and we are currently mostly on WhatsApp, because WhatsApp groups are much easier to form, and we can post webinar dates, and we do conduct trainings. And currently, NABARD also has a group of FPOs, and they also try to do similar activities. So this is a way of reaching out to a large group of farmers, trying to give an indication that such a company is existing. And but the next level is you may have to go to their village, visit them in person, and all that continues after that.
Thank you, Kavita. Whom can I ask? Dr. Vaibhav, what has been your experience? Processed food. Typically farmers would like to cash out on harvest, and you're looking at adding value to them. What's been your experience?
Surely. So we have three players that we work at a rural level. One is a farmer who does mainly a production and a selling part. Then we have women entrepreneurs who are into the procurement, and then second set of women entrepreneurs who are into the food processing bit. So initially we tried with doing everything with farmer, then realized that farmer has already a lot of things to do, and we really have to segregate these roles. And that's how we created farmer for production, women entrepreneur for procurement, and women entrepreneur for processing. And that is fabulously working well. So far as it comes to the trust of the farmers and the digitization, our experience is quite positive. Few of the things which really concern farmers are the price that we are offering and the trust in the payment system, right? Who is the buying? So initially we tried to do by ourselves, and then realized that if there is no local face, then it becomes a challenge. And that's how we figured out a route of working with women from the same village. And gender angle plays a role where a trust is much higher, with women being a part of the system and from the same village. That's like one thing. Second, the FPO route and the particular FPO supported by NABARD is also interesting thing. And what we generally do is that all the women farmers, entrepreneurs, and for procurement and processing that we work with are generally the shareholders of the FPO, and that creates an additional layer of trust. So one is the local presence, and other is a partnership with the FPOs has really played in terms of the success for our model. Typically what we're observing is around 6 to 7% of the produce that is generated, like produced by the farmers in the village, is bought by our model. And that's a significant share if we look at that is being sourced for mandis and local traders and weekly markets. So that's what our journey has been. So far as the digitization is concerned, we are seeing there are a group of farmers who are quite habituated with tech like WhatsApp group and Facebook groups, but there are other set of farmers who are not very familiar. And that balance we need to maintain in terms of the communication strategy. And recently someone who we onboarded comes from a rural marketing background for newspaper, and that has also really worked well because they really know how do we communicate with farmers from different stakeholders. So someone who is large in terms of land holding, maybe Facebook and WhatsApp makes sense, but someone who is smaller, say 2 acres, rain-fed agriculture, that communication channel doesn't work. So it needs to be balanced, and that's why we chose a route of deep pocketing, focusing on village by village and growing village revenue to almost like 1 crore per village. So that's the model we are following, and that is working well. So it is via multiple iterations, definitely.
Great, thank you for sharing that. I know these are valuable to many of the people who wish to explore this space, but otherwise, for me, I've always said agriculture is like ocean, and imagine a startup in that. Building moats, we'll speak about it later. It's really you begin even by finding your feet to be firm. Rohit, I just wanted to ask you, the silage is such an old subject. Every one of us reads it for 15 minutes and thereafter even forget that it's important. And you really picked up a very interesting and a very opportunistic thing. How did you get the trust of people?
So I think trust of people, I don't come in from an agri background per se, really. It is the product that actually does the wonders on the ground. So when it comes to feeding a cattle, you get the results in 3 to 5 days. So there's no lying, ultimately a cow is a milk producing factory in a way, and any productivity increments or nutritive values that we are kind of delivering will get validated in a period of 5 to 7 days. So it's like real quick realization that happens. The other side, of course, is on the sourcing side, wherein we are sourcing a lot of crops. So the first year was very challenging. We did about 200 acres, and now we've scaled to about 5,000 acres in Punjab itself. And, these lot of silage units, it's kind of taking an industry shape in terms of, so we feel very proud of this fact, wherein, until 2015, there was not even a single silage bale being manufactured in India, and people were doing it in their own, sort of jugaad manner, trying to cover it up and trying to do this, but there were challenges which were there. So that scale has kind of really come in, and we've delivered value to an agriculture farmer as well as to a dairy farmer. So there is a lot of word of mouth that's kind of come through. Immediate validation of the product happens because the delivery on the product is there, but the education part was more critical. So for us as a team, still in markets like Rajasthan where we are going, we need to explain the product, that because there is a traditional feeding practice that is in there, and one needs to again give free samples as well, which we haven't really done, because once you give something to a farmer for free, then they'll expect it for free typically. That's like the challenge, and you're not able to deliver or register a particular value because it's given for free. So that's something that we've stayed away from. But on a paid basis, on a subsidized basis, we've tried to accomplish that fact, even kind of gone ahead and taken a challenge of compensating on their cost if they incur a loss. So they have to spend, but then we are very sure of what we are delivering to a farmer, and that's kind of done the wonders for us. And we've scaled up to the level at which we are. The challenge is done on a daily basis, and that's why the romance kind of continues, because we are going to enter into new markets, new territories, new places where we want to manufacture, and we face this similar challenge on a daily basis. So that's what we've kind of done. So I am in a simpler sort of space, wherein immediate validation happens.
But still, that's bold really, to not fall into the trap of subsidy and free samples, which many people think we need to resort to, and the farmer is poor. He can pay for it, and we must make him pay for it. That's when he'll value.
See, ultimately, I think they are anyways spending on a regular basis. So that spend is anyways going there. You have to deliver a better value for money. And once you do that, and we are very sure that silage is going to solve a lot of problems when it comes to quality of milk that an Indian consumer is having, when it comes to mitigating your challenges with regards to animal nutrition, the increasing, doubling farmers' income, which everybody talks about, but farmers' income is not going to double by just increasing the price of the produce that he's selling. You have to increase the productivity of the land, and that's where a difference has to kind of come in. Yeah.
Thank you. Ayush, I just wanted to also pick up something that's core to many of our startups really is, what new business models do we wish to pursue? We have seen the ecosystem, we know what we can get from there, and there's a lot of, what I would say, inertia we have to face. In your experimentation, what is the business model you would like to do if you're funded, if Jin would be available here and would bless you with your wishes?
Right. So Jagdish, I think first of all, let me touch upon the need for different partnerships coming together, like Kavita mentioned NABARD. I think for us in Distinct Horizon, where we were trying to kind of get the farmers to adopt our technology, of course, demonstrations seem to be the only way, and they still are. However, when more parties come together, like let me give the example of a rice ecosystem versus a sugarcane ecosystem is completely different, right? Like when we work with sugar mills, the adoption of a new technology can be much faster, because the whole sugar mills, for example, one sugar mill like BCM Shriram having their one mill has close to 70 to 80 people who are involved in trying to get better practices adopted by the farmers. So when we started working with the sugar industry, things became 10 times easier for us to kind of get these things adopted. Similarly, of course, when the government people start propagating about us, and there are other parties, of course, having more demonstrations is the number one thing, but having more support that can leverage these demonstrations into translation, be it such parties or if we have such business partnerships on the ground. So I think a massive kind of support could be like having more of this ecosystem backing these new technologies is essentially, I think, that number one thing. Of course, a lot of parties are coming forward, like Gates Foundation loves to see our results. They want to take it forward. Tata Trust, World Bank, IFC, a lot of such organizations are kind of playing very interesting roles. If I kind of come back to your question though, in terms of the business model or the genie who could kind of help kind of transform the business, I think business model wise, there is a lot of innovation possible. However, if we look at a lot of opportunities, especially in the service side, right? So the more we kind of try to just sell our product and make the money upfront, it is easier to do that, but the returns are minimal. However, it is difficult to do in a different way because the farmers will have to pay a bigger upfront price. Now, it's easier for us because for us to manage the cash flows, finances, it's obviously much easier. And we don't have to have repeated operational efforts going in. So that's where it gets tougher, right? So it's both easy and tough. And but that's where I think the future is in the longer service cycles, the better business models that are more longer term. And that's where I think a lot of innovation is going to come in, where we tie up with each other, we work together in terms of developing APIs, etc., where different people are on the ground and different people are developing the technology, but we kind of come together and make sure that the thing is actually adopted faster. So I think those things would really help.
Yeah, and I'm sure, what would I say? Hemendra and others also have been speaking, and a lot of us are listening about how we can build a rural eco space, because entrepreneurship in the rural is very different from what we would sit at Bangalore or Gurgaon or any other so-called startup cities. I wanted to ask, whom shall I pick on? Rajesh Ranjan, please. I mean, getting a farmer to sell a tractor and his cattle on an app, how did you go about doing it?
So,
and what
yeah,
business models would you like to see?
Right. So as I said, like first we thought there should be, so all of us just spoke about there is no such ecosystem is missing in the rural space, right? So when you talk about farmers, so if they are not online, if they are not on a digital platform, then doing business is very difficult, right? Especially when you take all the technology approach. So the idea was to bring them online, create some hook through which we can keep them engaged. And initially we were only focusing on kind of, so that's why the reason we took the social approach, where they can build their social capital, build their network, right? Talk to other farmers, talk to other stakeholders in the ecosystem. So when we saw initial level of user generated content happening on the app, right? So 90% of it was around cropping issues, or just showcasing their farms, or talking about some pest problems, some disease problems happening in their crop, right? But 10% was around something that they want to sell, right? Be it cattle, be it tractor, be it something else that they are growing, right? And we saw that there is much higher level of engagement on such content from the other farmers, right? So that means their information, their transactional need is probably a little more important as compared to their information need, right? And that was the first learning, that we should build such triggers more. And we then kind of created those triggers in the product, and sort of help these farmers to create that kind of content, to put this on listing with technology. The idea, then the next kind of question is to understand, now that you have taken a horizontal approach, right? So as a farmer, when you see Krishify app, so I mean, probably you are going to see 20-25 different content. So what is that out of hundreds of thousands of content that is happening every day? So what is that 25 content that should be picked for you? So personalization plays a very important role there. So then we started building, investing in building the data layer, and building AI based personalization, where you not only segment users basis their activities, but you also try to identify their contemporary need, right? So probably if currently basis their activities, basis their geography, if we see that this person might be looking for certain crop variety, or this person might be looking for some tractor, or probably be interested in buying a cattle, right? So then we start pushing all those listings that has been created by sellers in the vicinity, and then location is also a big factor, right? So that's how it has been happening. A few observations that we have made, hype. So most of the use cases, be it information or be it transactional, it's more in hyper local in nature, right? So a farmer from Bihar does not want to get suggestions or feedback probably from a farmer from Punjab, right? Or vice versa. So hyper local liquidity or user density is again very important, and that's the reason we are still focused only in the Hindi speaking belt. And the last 6 to 8 months we have put in our entire focus only on 3 states, UP, MP, and Rajasthan, right? So where we have maximum farmers base from as in today. Now when it comes to monetization, right? So monetizing this peer-to-peer behavior of transactions, so a lot of capital exchange activities happening, but how do we kind of claim our share in that? That is a challenge, right? And so far we have not been able to solve that. So although we are monetizing, but from a different channel, right? So we are keeping the farmers engaged. So I was just on a personal chat, I pinged Rohit that recently in some areas we have started commerce as well, right? And we are dealing only in single commodity, that is cattle feed, right? And we are seeing huge level of demand for that. Then we are monetizing with certain equipment companies, right, who need direct farmers access. So we have taken kind of a secondary route to monetize, and directly on this peer-to-peer transaction monetization seems to be difficult, right? So, and the idea is to use these features, use these transactional activities to keep on growing on the engagement bit, right? Keep understanding your farmers, keep them hooked, right? And in one of the areas that is commerce for us, where you go deep and monetize it. Yeah. And later on, like whenever you feel there is a right time where you can add more value in transactions. For example, cattle, if we go deep and let's say if we can give some kind of assurance or do quality check and then give assurance to the potential buyers, right? So then probably we can monetize that behavior as well.
Rajesh, I'm very tempted to ask you two phases. Is it slow and steady or fast and furious for you when it comes to engaging with farmers?
So see, I mean, from engagement and the nature of the product we have kind of taken for us, it has to be fast and furious, right? But when you see the practical challenges of the ecosystem, then you kind of you get that slow and steady approach, and somewhere you get in the middle path where it is more balanced, right? Because you can't, unlike as you said, entrepreneurship in agriculture in rural is much different than entrepreneurship in tier 1 cities.
Let's for some time not bother about investors because they really get scared of this language. But purely from all other agri-tech founders, it's important to understand what should be our thing, because I do see a lot of people build dreams on fast and furious, but reality on ground is slow and steady.
Right. No, so I would say, you can't go beyond a certain pace, at least in the given, because the whole ecosystem has to support that. And it's not just about investment, even gaining the trust of the farmer. You can't gain trust, in matter of weeks or months. It will take years to build that trust, right? So even for us, I mean, before a farmer start transacting on Krishify directly, opening up there, it's not that they are not using UPI today. It's not that they don't have debit cards, right? A decent percentage of this base already has that option, but will they open it up on your platform? In order to gain that level of trust, you have to invest in a lot before it starts happening.
Yeah, I just want to move on, keeping in mind the time. Manoj just wanted to ask what new innovations, and particularly what's your views on the whole thing of fintech people coming in with agri inputs? First Manoj, and then Kavita, please. Agri input sector and the tie-up with all fintech and trying to get into the farmers' pockets, acquiring more farmers. What's been your views?
Actually, like fintech, you're talking about something like Samanati, right? Yeah, actually that
Handling of
helps in a
inputs and
way.
projects.
Yeah, there are many. So what happens is like when we go with a kind of farmer groups like FPOs and the Krishi Vigyan Kendras, where actually the farmer means the credit assurance can be taken back. Otherwise, we have direct paying customers. So our 90% of the business is direct paying customers. So it's not, we are not depending mainly on financing, because finance is one kind of a thing like where always, of course, agriculture mainly in India is based on finance. But I would say that let us not train or encourage the farmers in that mode. Always take though the farmer has, means just now he would have completed a crop and he has sufficient money to pay for the next season, but still they try to diversify the money and again go for the, means that is where actually the farmers are losing money. So I think means in that way we are actually more cautious in not attaching with the finance models.
So I'm a bit different from what Mr. Manoj is thinking. See, because currently the situation, if you see in the whatever is happening in the agricultural sector because of COVID also, most of the fertilizers and other has now taken the opportunity to become cash and carry. I don't know whether it is right or wrong, but most of them have pivoted, and most of the big inputs today, the farmer is pushed to pay the cash and take the input. And what has happened in the recent past, in the last 2-3 years, though we keep thinking agriculture is the only field which has been putting crops continuously and all that, but still there has been a lot of hits for the farmer himself due to various reasons. And there is not enough cash available. I think it is a very good opportunity either ways. The fintech companies coming in order to fund the farmers and alternatively also fund the startup. So they are also doing both the things together. So they work on a credit based model for the startup, addressing their issue on working capital and other things, as well as on the farmer side, they try to address it is an independent decision for the companies whether to do that or not do that. But overall, I feel that the situation is good because otherwise we would land up in food problems, means we would land up in food shortage. That's what I at least predict considering the current situation. So this is a good model because at least the farmer, even if it is a cash and carry, he has to buy a chemical fertilizer, he'll have enough money to go and buy it, and then he pays he takes care of his crop and then pays the whichever company. It could be a startup, it could be a normal dealer distributor thing. So I think it's a very good at least for the current situation, I feel it is a most needed thing to happen, both for the startups, because startups also, like rightly, if you had watched the previous session, there's a lot of issue in venture capital funding that will be happening for the next 1 or 2 years. So currently, if the startup has to live, especially agri input startups, if such a model exists, it becomes very easy for us to sustain. And the other important issue is the network, the new business model that you were talking about. I feel this will also ensure the new business model. It's a new business model, of course, because the credibility comes from both the ends. So the farmer feels that the company is credible because when I buy from this company, I get a cash support or I get a financial support from this organization, and vice versa. He also understands that if this financial company is supporting me for buying products from this company, so this organization should also be credible. So the credibility is existing because of that, as Ayush rightly pointed out, because of the network. So considering all this, I feel that this is a good opportunity for startups as well as the farmers. A lot of fintech companies are emerging, but other things are there. Of course, the interest rates and other things are there, but I think that can be slowly worked out as we walk through the journey. Thank you.
Thanks, Kavita. There's so much to speak, each of you, and really I must keep looking at the clock. May I request each one of you take 1 minute and really in 1 or 2 sentences say, while investors and the media sees a lot of hype and euphoria, what do you see in the future? How far do you see that the new startups are going to take in kind of setting roots in the agtech startup, please? Okay. Ayush, how does the future look to you?
Yeah, Jagdish, I would like to slightly raise a slightly different point here. The future, according to me, where I would like to see it go instead of where I'm seeing it grow. So where I would like to see it go, is very aggressively towards natural nature farming. I think the first step is reducing chemicals towards organics, etc. Next step I see is extreme multi-cropping similar to forest farming. I see a lot of good things happening there. There are people like Clea Chanmal who has a lot of expertise there. And what I believe is we are just, the technology is catching up to also help that scale up very quickly. So what I mean by technology needing to come in is, number one, AI based designing. So a lot of sensing and remote sensing, and finally leading to AI based land design for multi-cropping, because otherwise this is a big challenge. Number two, the harvesting needs to get more matured, because if we are growing 40 things in 1 acre of land, the harvesting really needs to be robotic. Number three, if we are doing that degree of multi-cropping, we definitely need a lot of aggregation, storage, and market linkage, which is already taking place, to become a little more mature. So I think these 3-4 things coming together is a big future dream that I see once all these things become more mature. So yeah.
Great, Ayush. We entrepreneurs are always dreamers, and hence, I wish to end, head towards the end with these discussions. Rajesh, what do you see the future?
So Ayush just talked about market linkages, aggregation, all those stuff. So I feel that we have just scratched the surface. If you take all the companies in agri-tech and ag-tech today, right? So maybe valuations would reach in billions, but these problems are yet to be solved, right? So even aggregation today, so becoming a part of the transaction is a different thing, but then leading the transaction or revolutionizing it is a different thing. And we are yet to reach that stage in any commodity, in any geography. So exciting times ahead. It will take time, but we'll be there.
Rajesh, you're being humble. I really appreciate that. It's bold of you to even have taken on the journey that you have. Good luck. Kavita, a few words from you.
Yeah. Precision agriculture is a need of the day in order to give good quality food. So I see we are heading towards that, and most of the agri input startups are working towards that. So I'm going to take a very small zone instead of seeing a big holistic approach. Why? Because see, there is another view of the entire thing. So today, the use of chemicals or the pesticides, both resourcefully and also in the sense of pollution in the country, pollution in the environment, has to be brought down drastically. Forest going to that level is really very dreamy. I mean, that is a vision for all of us here, but it's a lifetime goal for the earth, actually. I should say that way. So at least for me, like if we're able to come up with a precision agriculture where we use a limited amount of chemicals, limited amount of all in a equal and very balanced way, and the farmers also being rich like any other community, maybe this is something, this is coming out of your own business, your own valuation, and this is there on the side, but ultimately most of us here are because of this reason also. So if I've been dreaming that our product should be available in a mart, in a mall sort of thing for the farmers, and the farmers should be buying from there. Their dreams have been there. I mean, of course, something like that, when they are able to earn enough, things would improve. The way the agri input market looks, I mean, they are rich enough to buy rich technology. That should also be happening, and not if not to that level, at least somewhere in the middle class level, at least we should be able to, and without any credits, cash and carry, like Mr. Manoj's point should also come true. That is what I see in 5 years, and I feel that is going to happen.
Yeah, I mean, really appreciate that confidence and clarity. Okay, Dr. Vaibhav, what do you see? Processed food, engagement with farmers for value addition, the women folk getting into processing. How is the future pan out for you?
Yeah, surely. So in agriculture, what we observed is two pieces. Number one, we have to put efforts in terms of fine tuning what we are building and making it ready to scale for a long-term sustenance. So that part for companies like us who are in this domain for a while have sorted out, and now it's a real growth stage that we are working upon. These districts we are mapping in Maharashtra at least, and we are seeing a potential to build at least 1,000 crore revenue from each district. So it's an enormous potential ready to scale. And one wish that we have to look at is how multiple companies can really focus on different value chains in the whole processing and value addition domain. as a company, we see that making a few $100 million business over a period of time really makes sense, just because the opportunity is vast and it's ready to grow now. So that's where I want to end, and thanks a lot.
So much. Thank you. Manoj?
Yeah. See, I see a lot of scope of increasing in organic segment because of one thing. The pandemic has pushed the people a lot towards the healthy food, and the sustainable developmental goals of UN nations is also supportive. And there are policies like India has banned 27 chemicals already, and many are in line to be banned. And like European Union is banning a lot of chemicals, and Sri Lanka all of a sudden has put a ban on chemical farming itself. And it's a huge shift for Indian growers to means there will be tremendous scope for increase in exports from India. But at the same time, there will be a threat also for Indians if they are not adopting towards the complete organic practices, because once Sri Lanka becomes complete organic, their exports increases and it will become vice versa. Like I see, there is a lot of scope for us, and we are expanding geographically. And like we have a joint venture with IFCO, and now we are having another Bhutan organic project with World Bank, and we are expanding. And I see there is a lot of scope for this kind of a segment for sustainable farming, and mainly in a country like India.
Thanks, Manoj. This whole incident of Sri Lanka has really kind of opened up so much debates about the economics of organic farming itself. Yes. Only time is going to answer. Okay, we'll have to wait and watch. I'm not very happy with much of the language and development that's happening, considering the subject. I don't think we should let economists take a decision on sustainability. Okay. Yes. In fact, all through this panel discussion, I've enjoyed the whole, what would I say, ethos of sustainability in each of you. Okay. Thank you so much. Rohit, your words, please.
Right. So I think everybody's very excited about agri-tech, and we keep on reading about agri-tech and funding, but a lot of agriculture in India, if I'm talking about India in particular, remains very fragmented. So, of course, market linkages, insurance, financial penetration, of course, plays a key role in it. But at the end of the day, it's a daily toil that happens on the field, on the ground. So there's a lot of innovations that companies which are there on the panel are doing, which will take its own time. But with linkages, and we are in a good space right now, wherein it will all go hand in hand. So time for agri-tech, as Rajesh pointed out, we're just scratching the tip of the iceberg, or we see the tip of the iceberg. So this is the next big opportunity that is going to be there. Whether in terms of physical delivery of products, or market linkages, or financial penetration, but and India is going to lead that. So I'm pretty sure about that.
Thank you so much, Rohit. Each of you guys deserve a couple of hours at least. You have put in so many years behind your dreams and with the farmers, I'm sure. But given the nature of this event and today, we really need to wrap it up, and look forward to being in touch with you guys, and sometime soon doing one-on-one. Okay. Thank you so much, each one of you.
Gentlemen, I would like to step in and thank you so much for being with us. Jagdish, you were an absolutely terrific moderator. Jagdish kindly rightly said, right? I think each of these conversations, I think with all of what you were doing, right, requires so much of a focus, right? And I think this is, having a panel, right, is and I feel this on occasions, right? There's just so much of intelligence that founders today have, right? And the complexity that they're dealing with needs more time, right? I'd love to have you for one-on-one discussions. Our team at Asia Tech Journal will reach out to you. We'll set up those sessions, and we would love to cover a lot what you're doing, across our video sessions, one-on-one interactive sessions. Thank you so much for taking the time out. It was a pleasure to have each one of you. Sorry, I didn't participate because I was constantly across many other panels, but I thoroughly enjoyed listening to each one of you. I know some of you personally, right? I know the great work that you've been doing. And like I said, it'll be a pleasure to host you on one-on-one sessions. Our team will reach out to you shortly. Thank you so much for taking the time out. It was a pleasure to have you with us.
Yeah. Thank you, Ashu. Thank you, Jagdish.
Thank you, Mr. Jagdish.
Thanks, everyone.
Thank you so much.
Ladies and gentlemen, with that, we come to the close of India Agri Innovation Futures 2021. We thoroughly enjoyed, the conversations that we did today. They were absolutely outstanding conversations. There's just so much more intelligence. Agriculture is a very diverse sector. In a market like India, the complexities only increase, right? Because there are just too many stakeholders, right? We have a lot of our issues, when it comes to, farmer empowerment, education. Uh, how do we sort of help them increase their incomes, right? There's just so much that needs to be there, and there's so much of work that needs to be put in, right? I think it's difficult, right, on many occasions to sum it up all together in these sessions, right? We are going to have many of these speakers to join us for focus sessions where we're going to be talking to them about their businesses, right? How are they tracking for the problems? How are they solving for the unique sets that they are, building for across some of the upcoming conversations, right? Thank you so much for being a part of this series. It was a pleasure to have you with us. We thoroughly enjoyed. I hope you did too. We look forward to having you with us much sooner. Thank you very much for taking the time out. Thank you.